I completely forgot Mr. J. Powell was live. I was on the phone with Steve, and I just realized Powell was live. We're going to Powell, baby. I forgot. Here we go. But I forgot only 3 minutes after he started. So here we go. Let's get to. Oh, he hasn't started yet. Perfect. There we go. He hasn't started yet. Amazing. Amazing. All right, I'm gonna go live. I'm gonna get my stuff ready. Literally, bro. I just forgot. But here we go. Let's get ready for Powell. He should be on pretty soon. Wow, I can't believe. And we will hold this up. Hold on. See, my good camera's not even set up. Nothing's set up. I was like, Steve, I gotta go. We got our boy J Pal. He's here. Okay, hold on. All right, let's pull this up right here. Dude, I legit forgot. I legit forgot. All right.
Already gotten a peek at.
Yeah, I did. I mean, I think it's going to be fascinating. I think there's a bunch of things. You've had some acceleration in inflation. On the CPI was pretty good. The comment on housing, I think, is interesting because you got the mortgage rate up. And much of why housing inflation is still high is because mortgage rates are high. If you actually brought the rate down, you'd get more home building. You bring down affordability. And so I think that's interesting. One thing, since they cut rates, first, since they started cutting and they cut 50, the front end of the curve has backed up almost 130 basis points. So this question of, is the market setting policy for the Fed, I think, comes into question. Listen, I'd love to know what the terminal rate is that the Fed is assuming today, because that has the amount that has moved recently has been significant. So anyway, there's a ton of questions. How do you interpret the new policy that could come in? How does that affect your process from here? I think it'll be fascinating. How much he describes.
Okay, so well, I'll talk a little bit until he comes live. I got to get set up a bunch of things, but yeah. So I'll keep an eye when he comes live. It should be pretty soon. Folks, Tesla's down badly, and HIMS is down badly as well. Both of them are getting absolutely murdered today, and the reason they're getting killed, well, Trump is getting rid of the EV subsidy, and Tesla is actually okay that Trump is getting rid of the EV subsidy. This came out from Reuters a couple of hours ago. Right here, the Trump transition team is planning to get rid of the $7,500 EV tax subsidy. Refinitiv Alerts also said that Tesla reps are supporting to end the subsidy. That has been confirmed. So you got Tesla stock right here that's basically saying, hold on, we don't fully know if we love the fact that Tesla is not going to have this subsidy anymore, although, markets kind of expected it. QUBT, someone mentioned it this morning. Ironically, I was just talking to Steve about this stock before I went live. Up 60% on the day, so quantum computing catching a bit of a bid. Tesla is down 5.4%. Tesla is getting hit on this. I have a lot of thoughts on this EV subsidy thing. You could argue bullish, you could argue bearish. There's a lot of different perspectives to go to be able to make the argument. But I do think that there are bullish and bearish elements to it. I'm leaning more bullish for one reason, and we'll talk about why. But short term, it's definitely bullish. And then HIMS has been decimated as well. We were talking about HIMS last week on Stock Talk, and we have a little bit of a clip that I want to show you guys, but down 25%. I think in the morning, the most we saw was down 15%. I don't know if 25% is what we needed to get for HIMS, but it is getting hit. Here is a 1-minute clip we had on Stock Talk. It's a show I do on every Thursday. I'll be doing it again today from 6 to 8 p.m. on Twitter. And here was a discussion we had on HIMS for a minute, kind of playing out today as Amazon has entered into that space.
Is HIMS competition to Amazon's pharmacy?
The other way around is how I would phrase it.
Okay, why? Why is that competition to HIMS?
I just think Amazon has the capital and the logistical network to penetrate any retail category, including healthcare and including delivery of pharmaceutical drugs. Amit, I'll counter your question with another question. What is stopping them? If that category becomes
a good point,
multi-$100 billion category, which I think in theory it already is, but what's stopping them from just saying, yeah, you can just buy drugs on Amazon? and have them delivered to your house in 2 days.
Yeah.
Regulation.
Yeah, and if Hims got a lot of momentum because of like their bootleg version of Ozempic. I mean, I would imagine Amazon.
No, but I mean, what
if
the
they really
bootleg
cared
version of
about.
Ozempic's what, like 10% of their business,
Right.
So
right.
you know what?
It's funny. We were talking about that literally last week, and my friend Stock Talk right there on the Twitter Spaces. He's a really big bull on Amazon, but still, he's making a valid point, which is that look, Amazon has always said your margin's my opportunity. If they don't think Hims necessarily has the ability to maintain those margins, they will undercut them, which is obviously their opportunity. And they are going to try to get some of that momentum from that. So that is why Hims is taking a nasty decline right here, down 25%. I didn't expect it to be this bad. I mean, this thing was up 40% this week. Now it's up 20% because 25% has been gone in a day for Hims. S&P 500 down about 0.6%. This is the most red we've seen on the S&P since Trump got elected. We have not seen a down 0.6% day in a while. Bitcoin as well, down about 2%, still holding above 80,000, which I think is incredible, or at least above 87,000, which is nice, 88,486. Robinhood, ironically, let's see if it's still green, slightly green, but Robinhood's been pretty green all day. Market's been okay with Hood, even though Bitcoin has been taking a hit. So kind of nice to see that Hood's been holding up. Coinbase, let's take a look at them. Coinbase is down 0.52%, and the MicroStrategy is also up 1.1%. It was up about 5% during the day. You got Spotify up a little bit, AppLovin up a little bit. Enphase is up 7% today. I don't know why. I think I saw this headline like a couple hours ago that Enphase was starting to trend up, but now Enphase is like legit up 7%. Oh, maybe. Well, no, I don't think Tesla would explain it, but it is weird. I'm not sure why. I guess it just got oversold and people started buying it up, which is fair. I mean, Jason said on Technical Tuesday that 60 is the line where if it goes beneath, it's kind of screwed. If it stays above it, then it's good. So staying above 60 right here is good for them. And then obviously you got Tesla right here down about 5.4% on the day, which is absolutely taking a hit. SMCI, let's take another look at that. I haven't looked at that in a couple hours. SMCI down 12%, 1784. Any dip buyers that were there around that $18 range or that $19 range are getting hit. So you got SMCI going down. Oklo has earnings after the bell. J-Pow still not live yet. We're waiting for J-Pow. Oklo's up 3.32%, and then ASTS also has earnings. They are down 5% as we are waiting for earnings. Trader says it looks juicy to start selling puts on SMCI. It definitely looks juicy. The problem is, do you trust management? And I personally don't, given they have a history of this stuff. I do get that it's juicy to sell puts, 100%. That's usually what happens when stocks fall badly. Same thing with Hims. It's probably really juicy to sell puts on that as well. Question is Amazon really coming for Hims? And is SMCI really going to be able to not get delisted? I mean, these are the questions I think that a lot of people are answering right now or asking right now. All right, J-Pow's live. Let's go to J-Pow. He just went live. Here we go.
Has weathered a global pandemic and its aftermath and is now back to a good place. The economy has made significant progress toward our dual mandate goals of maximum employment and stable prices. The labor market remains in solid condition. Inflation has eased substantially from its peak, and we believe it is on a sustainable path to our 2% goal. We are committed to maintaining our economy's strength by returning inflation to our goal while supporting maximum employment. The recent performance of our economy has been remarkably good, by far the best of any major economy in the world. Economic output grew by more than 3% last year and is expanding at a stout 2.5% rate so far this year. Growth in consumer spending has remained strong, supported by increases in disposable income and solid household balance sheets. Business investment in equipment and intangibles has accelerated over the past year. In contrast, activity in the housing sector has been weak. Improving supply conditions have supported this strong performance of the economy. The labor force has expanded rapidly, and productivity has grown faster over the past 5 years than its pace in the two decades before the pandemic, increasing the productive capacity of the economy and allowing rapid economic growth without overheating. The labor market remains in solid condition, having cooled off from the significantly overheated conditions of a couple of years ago, and is now, by many metrics, back to more normal levels that are consistent with our employment mandate. The number of job openings is now just slightly above the number of unemployed Americans seeking work. The rate at which workers quit their jobs is below the pre-pandemic pace after touching historic highs 2 years ago. Wages are still increasing, but at a more sustainable pace, and hiring has slowed from earlier in the year. The most recent jobs report for October reflected significant effects from hurricanes and labor strikes, making it difficult to get a clear signal. Finally, at 4.1%, the unemployment rate is notably higher than a year ago, but has flattened out in recent months and remains historically low. Turning to inflation, the labor market has cooled to the point where it is no longer a source of significant inflationary pressures. This cooling and the substantial improvement in broader supply conditions have brought inflation down significantly over the past 2 years from its mid-2022 peak above 7%. Progress on inflation has been broad-based. Estimates based on the Consumer Price Index and other data released this week indicate that total PCE prices rose 2.3% over the 12 months ending in October, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Core measures of goods and services inflation, excluding housing, fell rapidly over the past 2 years and have returned to rates closer to those consistent with our goals. We expect that these rates will continue to fluctuate in their recent ranges, and we're watching carefully to be sure that they do, however, just as we are closely tracking the gradual decline in housing services inflation, which has yet to fully normalize. Inflation is running much closer to our 2% goal, but it's not there yet, and we are committed to finishing the job. With labor market conditions in rough balance and inflation expectations well anchored, I expect inflation to continue to come down toward our 2% objective, albeit on a sometimes bumpy path. Given progress toward our inflation goal and the cooling of labor market conditions, last week my Federal Open Market Committee colleagues and I took another step in reducing the degree of policy restraint by lowering our policy interest rate by 1/4 percentage point. We're confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained with inflation moving sustainably down to 2%. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks to both sides. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. We're moving policy over time to a more normal setting, but the path for getting there is not preset. In considering additional adjustments to the target range for the federal funds rate, we will carefully assess incoming data, the evolving outlook, and the balance of risks. The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully. Ultimately, the path of the policy rate will depend on how the incoming data and the economic outlook evolve. We remain resolute in our commitment to the dual mandate given to us by Congress: maximum employment and price stability. Our aim has been to return inflation to our objective without the kind of painful rise in unemployment that has often accompanied past efforts to bring down high inflation. That would be a highly desirable result for the communities, families, and businesses we serve. While the task is not complete, we've made a good deal of progress toward that outcome. Thank you very much, and I look forward to our discussion.
Thank you, Chair Powell, for those remarks. I will note that you are not the only Fed official who is giving a public speech today. Your colleague, Governor Kugler, gave remarks earlier today in Uruguay about the importance of an independent central bank. No particular reason, I'm sure, that was the topic of the day. We have a lot of students here today. I'm wondering if you could just explain in general why there is this bromide about it's important for the central bank to be politically independent.
Sure, I'd be glad to. Let me say what we mean by independence first. So what that really means is that the decisions that we make about monetary policy, about interest rates, cannot be reversed by any other part of the government except, of course, Congress. Congress created the Federal Reserve by statute and can do what it wishes to do by statute, but our decisions are not reviewable by any other agency. And we are charged to make those decisions With regard to the medium and long research about central bank independence, and what it shows is that central banks who are independent, meaning independent from the other parts of the government, do a better job on inflation. And that makes a lot of sense because, you know, we're thinking really just of getting inflation under control while keeping the labor market strong, and we're not thinking of other political factors, which would frankly be a distraction to the already difficult work that we have to do the main job. So the academic research is very clear globally, by the way. This has been a global trend for more than the past 50 years. Advanced economies like the United States economy around the world all have central bank independence of one part or another, in one form or another. The other thing I'll add is that what comes with that on our part is an obligation to be highly transparent about what we do, to explain ourselves to the public, to Congress. Congress has oversight over the Federal Reserve in our system. So we spend a great deal of time talking to the oversight committees and the broader Congress in the House and the Senate, explaining to them why we're doing what we're doing. I testify as a matter of statute 2 times of the year in each of the House and Senate. So that kind of gives us the accountability that we need to be democratically legitimate in a situation where we do have some independence.
The macroeconomic conditions that you just described in your remarks sound tantalizingly close to a soft landing. I know you're not willing to declare victory yet. To what extent do you think the fact that the Federal Reserve is credibly independent is responsible for the good outcomes that we've had so far?
So the credibility is really everything in our work. And I think, as you know, inflation spiked really globally, all around the world, as the economies around the world reopened after the pandemic shut down, and on the back of a lot of fiscal and monetary stimulus. We saw a burst of inflation all around the world. And what happened is we raised interest rates to bring that down, but the public had faith. We measure inflation expectations many different ways, surveys and based on market-based instruments, and they all kind of showed the same thing, which is the public all through all this believed that we would get inflation down, that we would restore price stability, which we define as 2% inflation. And that's ultimately the key to it. Inflation is a social phenomenon. If people believe that inflation will be higher, then it probably will be. And if they believe that inflation will come down, then people who make and take prices and wages, they will make sure that it does come down. So it's absolutely critical that we be credible. And part of that is that we responded so forcefully when it became clear that inflation needed a response from us. We responded quite forcefully, and we think that helped keep inflation expectations anchored, as we say.
And then one last question, and then we can move on, I promise, on this. There have been times in U.S. history when people look back and say that the Fed was not seen as terribly independent. What did we learn from those episodes, in your view?
Well, if you go back to the period of the high inflation, which I'm old enough to remember, it was during my college years, and basically the public kind of lost faith that the Fed would restore price stability, and the cost was a decade of very high and very volatile inflation, quite difficult business conditions, extremely difficult for people on a fixed income. Think what that does. You may have felt it. If you're on a fixed income and prices go up 20%, you're just in trouble right away. So inflation is worst for people at the lower end of the income spectrum and the wealth spectrum. So we've seen it here in the United States in the 1970s, actually, and it's not a pretty picture. So, I think this is very widely, by the way, understood and supported. I've spent a lot of time on Capitol Hill, and I think where it really matters on both sides of Capitol Hill, the Senate and the House, in both political parties, there's a broad understanding that an independent central bank is very important in just serving the public as best we can. We're not perfect. Everyone makes mistakes, but you'll get the best results if you have people who are just focused on that task and separate from politics.
Thanks. A little bit more elaboration from what we heard last week at the press conference on this question. In that press conference, you basically downplayed the impact of the election on FOMC policy. You said we needed to kind of wait and see. But that does stand in contrast to how the FOMC behaved at the December 2016 meeting, when roughly half of committee participants, according to the transcripts, upgraded their economic forecasts based on expected changes to fiscal policy under a Trump administration, and in particular, a previous trifecta in which the Republicans controlled both chambers of Congress and the White House. You were, in fact, one of the policymakers who made changes to your forecast, finding that the staff's assumptions around a tax cut was a reasonable placeholder, which gave you greater confidence in the outlook. Does that approach seem reasonable in the current circumstances? That basically, since the FOMC has been starting to judge some downside risks to the growth outlook, does the election and the results that we have today remove or at least substantially mitigate downside risks to growth?
So that's your question? So I think it's too early to reach judgments here, and I'll tell you why. So the job of staff is to go, and be very nimble and make assessments in real time, much like capital markets do. The markets are pricing in assessments of what policy changes will be made and what their effect on the economy will be. And staff will do all of that. I think policymakers are going to wait longer to see what the actual effects will be. And so for sure, at our December meeting, staff will present what we know. But the thing is, we don't actually really know what policies will be put in place. We know that policies in several areas will change. We don't know how much. We don't know over what time frame. When it comes to fiscal policy, it takes quite a long time to get a bill through Congress. And I think this year, what we're looking at is something that doesn't need to get done until the end of the year, and therefore probably won't have any economic effects this year, but it'll be more 2000 or 25. It'll be 26 or 27. So I think we have time to make assessments about what the net effects of policy changes will be on the economy before we react with policy. That's not to say we won't be doing quite a lot of analysis. And the analysis we do, by the way, is informed by the best research, the best thinking, the best experts, and there's a lot of research on the effect of policy changes on the economy. We'll make those assessments, but I think we'll be careful about changing policy until we have a lot more certainty.
You've spoken before about federal debt as being at unsustainable levels and the potential consequences for growth. Do we get to a point where deficits and debt get so high that it makes your job harder, essentially, that makes it harder for the Fed to achieve its goals?
So we're not at that point now. I want to be clear that we're not in any way taking into account fiscal issues when we make our, let me say it this way, the debt issue is not an issue that is guiding us in making our economic judgments. Fiscal policy can, of course, affect the economy. First of all, we do not have a role of supervising the elected branches that do fiscal policy. In fact, it's the other way around. So we don't give them specific advice. But as I have often said, and as all of my predecessors have noted, the U.S. federal government budget is on an unsustainable path. It's not that the debt we have is at an unsustainable level. It's not. It's that we're on a path that's not going to be sustainable. We have a very large deficit at a time when we're at full employment. And I would just say, we know that we're going to need to address that, and it's going to need to be done sooner or later, and sooner is better than later. But I leave it at that.
In addition to the potential long-term risks that higher deficits and debt present for growth, are there also risks to the functionality of the Treasury market? When shocks hit the market, and if so, how might the Fed respond?
Well, the functioning of the Treasury market is incredibly important, and it does function very well. It's the most liquid and most important, probably, financial market in the world, certainly one of the most important. And we did see some, at the beginning of the pandemic, you may remember that the Treasury market lost function because normally in an emergency, money flies into the Treasury market, but the pandemic was such an unusual event. People didn't want to own longer term securities. They only wanted to own effectively cash. And so we had to jump in and support that. I think more broadly than that, it's just important that that the Treasury market remain well regulated, and that companies have an incentive to do intermediation in the Treasury market. It's relatively low risk. It's very important for the economy, and it's important that be the case.
In the March 2020 episode that you're referring to, the Fed ultimately had to step in as a lender of last resort. Would the Fed do that if there were similar disruptions in the initial issuance of treasuries? That was in the secondary market, as I recall.
We're not a fiscal actor, so that was a situation where we have a mandate that we share with other agencies to look after the financial stability, and part of that is if really important markets break down, and they kind of all broke down at the beginning of the pandemic. They just stopped working, and so we set up a series of facilities to backstop those markets, but they actually didn't get used because just the fact that we had the facilities restored credibility, and the markets started working on their own. It was remarkable. So in the case of a financial stability event like that, or the global financial crisis, where really the whole global financial system was at risk given the failure of a number of large financial institutions around the world, in those kinds of things we can use these emergency tools, but they're not for every event. They're really for financial stability events.
You mentioned that it's a little bit too early to know what policy beyond the remit of the Fed would look like. We don't know exactly what the fiscal picture will look like, but we do know directionally that tariffs are likely to go up, right? Even if we don't know how much, we don't know necessarily if it'll be exactly what was described on the campaign. And I'm wondering how you're thinking about that. Go on, sorry.
So what matters for us is we don't stand in judgment over these policies in any way. What matters for us is to what extent will new policies have an effect on our mandate goals of maximum employment and price stability, and do we need to change our policy because of these changes in order to achieve those goals? And that's the answer to that question is not obvious. Let's say that there will be some tariffs. We have no idea what that's going to look like. That's one thing. Another thing is, what about retaliation? That changes the picture. In addition, that's happening at a time when there could be fiscal policy, which could be supportive of the economy. So what's really the net effect? We don't take one piece of this. We're looking at the whole economy. In addition, remember, this is way over a $20 trillion economy. Many, many things affect the economy all the time. It's not that common that changes in government policy have immediate effects in the achievement of our goals. That could be the case. And of course, we will use our tools as we're supposed to do to foster the achievement of maximum employment and price stability. That's what we do. That's what we always do. And we'll do it here. I'm just saying we're going to be careful to wait and better understand the net effects of these things as those things affect the achievement of our goals.
If you look back to the previous round of trade wars under Trump's first term, the Fed staff prepared a report in the 2018 Teal Book where they basically talked about whether the Fed should be looking through any price increases that result from tariffs and assume that it's a one-time step up in prices as opposed to self-perpetuating inflation or not. And the staff said at the time that the Fed should look through the tariff increases so long as, one, you think it's going to be a one-time adjustment and not a series of adjustments, and two, so long as inflation expectations are anchored. It's not obvious that either of those conditions will hold the next time around, right? Back in 2018, we had decades of very low inflation. Now we've had a much more recent experience with higher inflation. And as you point out, there could be a series of retaliations and tariffs and counter tariffs and counter tariffs. So are the risks bigger this time that a price shock could feed into trend inflation?
They're different, and we're in a different situation. The debt situation has changed substantially, and you're right. We're not, 6 years ago and such, the inflation was really low, and inflation expectations were low. Now we've come way back down, but we're not back where we were. It's a different situation. Inflation's still running above 2%. But we'll take all of that into account. I tell you though, the answer isn't obvious until we see the actual policies, and even then it's not obvious. So I just think we reserve judgment until we actually know what we're talking about. And I don't want to speculate. I don't want to guess. I think it's more important that we wait and see what actually happens.
Last time around, as you suggested, there were mixed consequences, there were mixed effects. And as I recall, during these previous trade wars, the Fed actually cut rates several times because there were consequences for growth and investment and confidence. So how does the Fed respond if higher tariffs result in both higher prices and slower growth? Do you have the tools to respond to that?
Well, so you're absolutely right. So in 2000 and I guess it was 19, we cut rates 3 times, and that was right after there had been fiscal stimulus, there had been tariffs, and so it really was because the net effect of what was happening, and of what was happening around the world too. There was global growth was really soft. There was a feeling that the U.S. economy was softening. We actually cut rates 3 times, I guess beginning mid-year, and that kind of worked. You know, that restored confidence. We felt at the end of 2019, we felt like that had really worked, and that situation was quite a good one. Of course, then the pandemic arrived, and none of it mattered. So that's the way it happened. But that's exactly my point, though. You know, we had a meeting the prior December, and it briefed us on what might happen. But what actually happened was something quite different. So and I'm not talking about the pandemic. I just mean the way that played out. I don't think we started that year thinking that it would be appropriate to cut rates 3 times. So just know that we will do what we believe is the right thing. That's what we're always going to do. But I think it's really important to reserve judgment and you know, see how this plays out. We're still months away from a new administration, let alone knowing the real details of what's going to happen, and then being able to project what will be the net effects on the economy.
Another major factor in the economy in the past year or so, you've said, is immigration. That immigration is a strong reason why supply and demand have gotten closer into alignment. In the past few months, we've already seen big decreases in immigration. What effect do you think that is likely to have on the macroeconomy in the near term?
So before I answer that, I do want to say that immigration is a question to be addressed by political authorities using such values as they deem appropriate. We're looking at the macroeconomic effects and reporting on them. It's not a question of judging. We don't have a view on the right level of immigration. That is for the voting public and their elected representatives. Okay, but what we saw over 2023 and 24 was a surge in immigration, and also a surge in the labor force, and it certainly pushed up economic growth, and it may or may not have had some effect on getting the labor market back into balance. You know, it'll take time to really understand that, but it certainly made for a bigger economy. And you know, we're coming off the back of a severe labor shortage, so there was room at that time for people to get work, and they went to work at roughly the same level as non-immigrants went to work. So that happened. Then the rules changed. The current administration, the Biden administration, changed the rules a few months back, and we've seen that come down. These are judgments that get to be made by elected people about what the right thing for the country as a whole is, not by us. You know, but you ask what the effects will be. You will see. Really, there have been 2 supply side things that have been pushing up U.S. potential output and actual output. One of them is just more workers, and the other one is productivity. And the more workers part of it is probably diminishing in its effects. And so that won't be something that's pushing up overall output. At the same time, the number of job openings has come way down, so it's not clear what the overall effect will be there's about 1 job opening for every unemployed person now. In terms of productivity is incredibly important. That's just output per hour. And if you think about it, higher output per hour is really the only way for incomes to go up over time among the public. And we've actually had, for the first time in a while, a few years of higher productivity, going back 5 years now. This is incredibly important and very positive, and we hope it continues. And there's no reason why it can't. I will say, though, that over the past 50 years, if you look at it, if you have 1 or 2 or 3 years of high productivity, it tends to revert to the trend really quickly. Because it tends to be driven by longer run things like evolving technology and evolving educational levels and things like that. So you don't tend to get big increases of productivity that are sustained very often. It's quite rare, although it has happened.
I do want to ask you some more questions about productivity, but just one follow-up on the immigration point. So economic growth is about the size of the workforce and how productive that workforce is. I asked before about the consequences of decelerating immigration. What happens if the workforce actually shrinks as a result of, for example, mass deportations, which may be in the offing?
You know, I'm not going to be comfortable speculating on potential policies. It's not our job to be a commentator on.
No, I'm not asking whether it's good or bad. I'm just asking, what does it mean if the workforce shrinks?
You know, I mean, I think we can do the arithmetic. If there are fewer workers, there'll be less work done. But we don't. It gets too close to, you know. I just don't want to go there. This is getting me into political issues that I really want to stay as far away from it as I possibly can.
All right, so let's talk about productivity. You're right that productivity has been above trend. I think 8 out of the last 9 quarters GDP growth has been above trend, largely because of productivity. To what do you attribute that?
So this is something people will be arguing about in decades from now, but I would give you 4 or 5 candidates. So one of them is that in the pandemic, people started a lot of businesses, and that many of those fail fairly quickly, or don't turn out to matter. But when there's a burst of activity in starting businesses, there tends empirically to be higher productivity because many of these are technologically driven, or the use of technology is pushed out into the society. So that's one. Another is that unlike a lot of our, for example, European countries where they kept the labor force in place, here people had money from government transfers and also from forced savings. They couldn't travel, they couldn't go to restaurants. And so they quit their jobs and they went and found other jobs. And so there was this huge reallocation of people from jobs that they actually didn't want that much to jobs that they wanted more. And we think that's a real factor in this. In addition, given the tremendous labor shortages, a lot of time and effort went into supplementing and people's technological capabilities in ways that substituted for labor. So there was a lot of that.
Can you give an example of what you mean?
Sure. I mean, just call centers. There's lots of ways to, you can now do call centers, so they're much more automated. We're getting to a place where call centers will be done by artificial intelligence probably. But also just you go to a fast food restaurant, which of course I never do anymore at my age. But if you go to a fast food restaurant, a lot of that is, and I've seen this in airports actually, you don't necessarily need somebody to take your order. You've got a nice menu, you punch a screen and the food appears. So, and there was tremendous incentive to do that when there weren't any workers. You saw stores that didn't have very many people in them and that sort of thing. So I think that's an example that we saw.
I don't think I heard you mention in that response anything about like generative AI. I'm wondering, do you think that could be part of a new era of productivity acceleration?
Artificial intelligence, pre-generative AI, is used all the time by big companies and modest-sized companies too, and it's certainly having an effect on productivity. Generative AI is just in the early stages, and certainly the companies and the banks in particular that we deal with are not really using it yet. They're not really deploying it yet, and they're very aware of the risks in it. So, but over time, I mean, you can find estimates from credible organizations that generative AI will create a burst of productivity, a large burst of productivity in the next decade. You can also find skeptics, very credible skeptics who think that that's hugely overdone. The history has always been that there's innovation, there's technology, it doesn't show up in the productivity statistics at all, and then it shows up a lot, but much later. So it's usually later and bigger than we expect. That may be the case here, because this really, it is an extraordinary set of developments, and the ability to replace a lot of work that's currently done by humans, including well-educated humans, is obvious.
How does that influence your thinking about monetary policy?
It really doesn't in the short term. We keep extremely close tabs on the labor force. If you think about it, monetary policy is trying to keep the economy at maximum employment and price stability, trying to use our tools to do that. And that's you're thinking, at 2 or 3 years out, the kind of things that drive longer run productivity and that matter for the longer run are really not tools that are in our hands. The best thing we can do for technological evolution is to create macroeconomic price stability, by which I mean price stability and a good, strong, stable labor market, so that people don't have to worry about inflation, volatile or high. And so that's the most that we can do, I think. Best thing we can do.
You mentioned that a lot of the financial institutions that you regulate or you oversee are also experimenting with these new technologies, with AI. Given that so much AI is not explainable, it's sort of a black box. A lot of the time, the software engineers or others who work with it cannot explain how it came to the decision that it did. Does that make it harder to regulate in the sense that there might be blind spots for certain kinds of systemic risk, right? If banks don't necessarily know how they're coming to the decisions that they're coming to, and there could be some herding that may not be obvious ex ante.
It raises just that kind of question, many different questions like that. I would say the good news is, in terms of the institutions we supervise, we understand that, but they understand it very well. I think people are treating AI very carefully, and they're not just loosing it, at least among the regulated banks, they're not just loosing it on their customers and on the problems they face. They're being very careful and thoughtful, we believe, or at least I believe, about how they implement it, doing lots of work, but they're keeping it carefully under wraps and not deploying it so much yet in their business. And working, everyone's working to understand the technology, where it's going, what it's capable of, what the risks are. And you mentioned that it's making decisions, and we often don't know why it makes these decisions. So how do you get after things like discriminatory outcomes in lending if you don't know why it's making its decisions? So it's going to be challenging, but I would say we're well aware of that, and so are the banks.
You have a 5-year strategic review coming up. How has your experience over the last 5 years made you reevaluate, if at all, the strategy adopted in 2020?
We had a strategic review, and we have a document called our Statement on Longer Run Goals and Monetary Policy Strategy. It's 1 page. The type is getting really small, so I think we're going to go to 2 pages next time. But remember, that was the era where for a long time after the global financial crisis, rates around the world were incredibly low. For example, major European countries, their longer term debt was yielding negative 30 basis points and things like that. How do you even understand that? So rates were very, very, very low in the economy. And that's a problem for central banks because we can't cut rates meaningfully below zero, and cutting rates is what we do to support the economy. So we actually like having significantly positive interest rates like we do now. All right, so what we did is we said there was a whole literature on how you deal with, in monetary policy, how you deal with having interest rates stuck at zero in effect, and you can't cut, you're kind of stuck, you can't support the economy, you get into this trap where growth is low, inflation is low, unemployment is high, and you can't get out of it without fiscal policy, and fiscal policy is challenged. So there was a lot of research done on it, and we took a pretty mainstream, fairly vanilla approach to that, which is I won't go into all the details, but it was to have a makeup strategy so that we would promise ex ante to let inflation run a little bit high if it were running too low. And the thought was, if people believe that you'll do that, if that's credible, then inflation won't run low. So that's all we did. 4 months after we announced that the pandemic hit, and then inflation a year after that came up. So the change, 20 years of low inflation ended sort of 4 months or a year and 4 months after we did the framework. So the question we'll be asking in this framework 5 years later is really it revolves around how do we think about the problem of the zero lower bound now? Now that interest rates are substantially higher than they were, substantially higher. Is that going to be so the question you're asking is, do we, in a world where we review the framework every 5 years, shouldn't we change the framework to reflect that interest rates are higher now so that some of the changes we made are probably not necessary, or in any case shouldn't be the base case anymore? They might be a case that we have that remedy at the handy, but at the same time, the base case should be more like a traditional reaction function where you don't promise an overshoot, you just target inflation. We haven't made any decisions, but those are the questions we'll be asking.
You mentioned the prospect of long-term rates being higher, the neutral rate being higher. You've said many times when asked by journalists, among others, about how we know when we've hit the neutral rate, that we know it by its works,
yeah.
Right? Which almost sounds like ecclesiastical or something. How long does it take to evaluate whether we've hit it? When do we know? If there are lags between the time that we hit the neutral rate and then we can see it in its works, does that increase the risk for policy errors?
Let me just take a second and explain. So we move interest rates up and down, but what is high and what is low? Compared to what is the question? You have to have an estimate of something that's kind of neutral, something that a level of interest rates that's neither pushing the economy up, supporting it, or dragging it down, which would be higher restrictive policy. And we fully acknowledge that there's no sort of either theoretical or empirical way to arrive at an estimate of what the neutral rate is that you can really have a lot of confidence in. So what does that argue for? It argues for moving carefully. So in our current situation, we feel like our policy is restrictive. We can't say exactly how restrictive it is. By that I mean it's weighing on economic activity and lending, hiring, and all that, because the economy was overheated and now it's cooling down, and it's moved pretty much as we had hoped it would, which is that we've had a gradual cooling in the labor market. Inflation's come down a lot. And the labor market's not quite stabilized, but it's in a good place. So it's actually worked very well. So we've started the process of cutting rates and moving back down toward neutral. I think the right way to find that level is carefully and patiently. You don't want to move too quickly. You may have to move quickly because if the labor market were to begin to deteriorate in a serious way, we would want to get ahead of that. But we're not seeing that. So I think what it tells you, as Catherine pointed out, we think that policy works with long and variable lags, to quote Milton Friedman. Monetary policy does have effects on economic activity, hiring, and all that, but with long and variable lags. And that makes it all that much more difficult to know how far to go. I think in this situation, what it calls for is us to be careful, move carefully, and as we sort of reach the range of, or get near the plausible range of neutral levels, it may be the case that we slow the pace of what we're doing, just to increase the chances that we get this right. We're navigating between, as I mentioned in my remarks, the risk that we move too quickly, the risk that we move too slowly. We want to go down the middle and get it just right so that we're providing support for the labor market, but also enabling inflation to come down. So going a little slower, if the data let us go a little slower, that seems like the smart thing to do.
So you say that interest rates are still restrictive right now, but if you look at the CPI numbers that have came out recently, or today's PPI numbers, core CPI is over 3%. I think when I looked, the 1 month rate is higher than the 3 month rate, which is, I believe, higher than the 12-month rate. The economy is booming. The market is on fire. Core PPI came in above expectations today. Business formations are up. Why are we cutting rates?
Big question.
It seems like the economy is doing pretty well.
The economy is doing very well, and that's a great thing. We totally welcome that. But look at the labor market. So what we've seen is a lot of the great data that we've seen has been because of the expanding supply side. Unemployment has moved up from 3.4 to now 4.1. By a significant number of indicators, it's still cooling. Our mandate is not for growth, it's for maximum employment and price stability. But on the inflation data, so we do see inflation continuing on that bumpy path I mentioned. Today's reading was slightly more of an upward bump than we had expected. But I would say the broader trend, if you look back over the last 18 months, we think that's still intact. We're going to tear this report apart and look at all the details. We'll get another report in December before the December meeting. We'll get another labor report. We'll get the final numbers for October by the end of this month. And we'll look at all of that and we'll make our assessment. We do believe policy is restrictive, and again, I would point to the labor market, but it's not clear how restrictive it is. That's a very fair point, and we're well aware of that. And I think we're mindful of the risk that we go too far too fast, but also of the risk that we don't go far enough. It doesn't seem like that's where we are either. It seems like we're right where we need to be. I mean, I do feel like the U.S. economy is in a very good place, and I feel like our policy is in a really good place. We've got a lot of space to cut rates if the economy weakens. In the meantime, we can take the process of reducing rates. We can be careful about that, and that's what we're planning to do.
I know we're short on time, so one last question. There has been an idea floated to announce who will succeed you as Fed chair in order to possibly exert more influence over monetary policy, a sort of shadow chair, two popes idea. Your term on the Fed's board runs until January 2028, beyond your term as chair, which ends in May 2026. Under what circumstances, if any, would you consider remaining on the Fed's board after your term as chair ends, as Mariner Eccles did for a few years after he was no longer chair?
So I would just say I'll certainly serve to the end of my chair term, and that's really all I've decided and all I'm thinking about. We're very focused just on getting the job done for the American people. That's enough of a job for us to do, and we're focused on that.
All right. Well, thank you so much, Chair Powell. I really appreciate it, and thank you all for attending.
Thank you, Catherine.
All right. That is Jay Powell. So this was relatively nothing interesting today in terms of what he talked about. Same stuff we heard in the FOMC meeting. The last question around, hey, why are we cutting rates if economy's booming, which is what I think everyone cared about. Jay Powell's answer was essentially, well, the labor market is weak. And I mean, look, that's not a bad argument. I don't know if the market's going to buy that, but yeah, that's the whole point of the soft landing. You don't want the labor markets to crash, aka recession. So you need to lower rates in order for 18 months from now for the effects for that to be in place. And I think that's what Jay Powell is trying to do right here. So these are the new rate probabilities for a rate cut. In the morning, it was 70-30. On Monday, it was 80-20. Today, it is 62-37. Call it 60-40. This is a pretty dramatic decline from a couple of days ago. Markets are obviously getting a little bit more scared that December we're not going to get a rate cut. We are going to get November PPI and CPI in mid-December. We got October's CPI PPI this week, and it was higher than expected. So that already is signaling, hey, maybe inflation is going to be a little sticky. And now, after Jay Powell said what he said today, markets are also pricing that in. Now, what was the quote exactly that got markets to go from 70-30 to 60-40? This one right here, verbatim, Jay Powell says, the economy is not sending any signal that we need to be in any hurry to lower rates. Now, when asked about that, Jay Powell did say the labor market is what we should look to for why we're cutting rates. But in terms of lowering rates further from here, he quite literally said we're not getting any signal that we need to be in a hurry to lower rates. So I think the October or the November CPI PPI in December is going to pretty much determine if we're going to get that rate cut. As of now, markets are 60-40 on what's going to happen with that. All right, we have got a lot of news to cover. We haven't talked about any of it because of the Jay Powell press conference, so we will get into that after the market closes. Two big companies have earnings today. ASTS, well, three. ASTS, Oklo, and Applied Materials. So Applied Materials, one of the companies that is a more legitimate company in terms of like revenues, earnings, etc. Oklo and ASTS, you could argue, are not as big. Obviously, they're more startups that have started to get some deals, some rumors that are out there. Their industries are trending when it comes to nuclear and space. Still important companies, not like a $150 billion company like AMAT. So we're gonna have to look at what these earnings look like. Now, I went through Oklo's and ASTS's previous earnings because I don't really know these companies that well. So I wanted to say, hey, what should we look out for? And it's kind of funny because if you look at their earnings decks from Q2, basically, you're not really getting any numbers here. This is ASTS. You're just getting a lot of progress, right? Satellites, deals. They're showing you the warehouse, the organization. You get some numbers here and there, but there's not really like top line revenue growth, earnings growth, adjusted EBITDA margin, because it's just not that mature as a company. Same thing with Oklo. If you take a look at it, very stylistic earnings report. Oklo has been a lifetime in the making. You see the kind of vernacular they're using as we get into it. You got the CEO at the New York Stock Exchange. I mean, not seeing any numbers, right? You're seeing milestones. Why? Because they don't really have numbers. That's okay. Investors are willing to bet on a company that doesn't have a ton of revenue growth or EPS or anything like that. But that's one thing to keep in mind. Whatever reaction we get on earnings, I don't really know if it's going to be because of earnings. It's just going to be because of whatever they say in the press release that comes out. And so I don't really know what we're looking for. I don't know what we're going to react to. AMAT will get some earnings, revenue, and EPS. For the other two companies, it's going to be more so around the narrative and the story that they are going to tell. We'll also talk about hedge funds. Michael Burry has been adding a decent amount to his positions when it comes to China. This one real quick, right before we get into the market close. He added 30% to Baba, 100% to JD, 50% to Shift 4 Payments, 66% to Baidu, and then a couple of other things. He reduced 50% by Real and 50% by American Coastal Insurance. So still going long on Baba for Michael Burry, and we're going to get a lot more 13Gs and 13Fs coming out pretty soon over the next coming days. All right, here we go. Lots of earnings to look forward to. And then obviously we'll talk about Tesla and HIMS, which were the biggest losers of the day. We'll talk about why those stocks are down. Thursday, November 14th, 4 p.m. Thank you everybody for being here. The stock market is now closed. All right, so here we go. We are looking for AMAT, Oklo, and ASTS for earnings today. And those are going to be the main ones that we look at, and we will see how everything else ends. So Oklo, let me know if any of you guys are into these stocks. I'm sure some of you guys are in a couple of these names. Oklo, ASTS, and AMAT is what we're looking at today. Before we get earnings, let's see how the market ended today. So the Qs, did we get a fourth red day in a row for the Qs? We did indeed, down 0.7%. Qs, fourth red day in a row for the first time in 2024. S&P 500, red day. We haven't seen a 0.64% day in a while, 593. On the S&P 500, SMCI was down 11% on the day. MicroStrategy down about 0.2%. Coinbase down 2%. Robinhood, nice green day, ended up 1%. Not bad for Hood. Going green in a market that was relatively red. HIMS, we'll talk about that, down 25% on the day. Tesla, also down 6%. Quick headline before, we'll get deeper into the bull and the bear case, but the main headline is the EV subsidy, the $7,500 tax credit is likely going away. And that's why I bought my Tesla last week, because I would not buy a Tesla without that EV subsidy. So that is why the Tesla stock is currently down right now. Nubank as well, down about 3% on the day. Quantum Computing, QUBT, was up 65% on the day. So that one was a winner. BuzzFeed was also up 12%. Spotify was up about 2%. Carnival Cruise was down about 1%. AppLovin was up about 0.19%. All right, earnings. Let's see if we get some numbers. AMAT is slightly up in the after hours, up about 1/3%. I don't think we have numbers yet. Oklo slightly up, and then ASTS slightly up as well. I don't think we fully have their results yet, but we should get them soon. AMAT's down initial reaction. Yeah, I think it was down a little bit, but now it's like 0.16%. Let's see if I can get numbers on that one. That one is the one stock that will be probably giving us some numbers today. Okay, so let's see what we got. AMAT's down 3%. Are we down? We're down? Yeah, we're down. We are down. We are down. It might be a little bit of a head fake, potentially. No, now it's down. It's like 1.4, 2.3. You're seeing the red. ASTS up about 2% in the pre-market. Let me see if I can get the numbers for AMAT. No numbers yet. No numbers yet. What is the street expecting? So the street is expecting for AMAT. They want. Oh no, we have numbers. Revenue, they wanted 6.95 billion. We have a beat, 7.05 billion. EPS, they wanted 219. We have 232. That's a beat on the top and the bottom. Stock's down 4%. Got a beat on the top and the bottom for Applied Materials. Stock is down 4%. Now, how much were they up year to date? Year to date, they were up 20%. Okay, so this was a semiconductor stock that wasn't up too much. Over the past year, they're up 20%. Yeah, this one hasn't really, I mean, over the past 5 years, they're up 200%, but year to date and over the past year, they haven't really benefited that much like the other semis have. AMAT now is going down 4%. Yep, 3.9% on AMAT. Okay, so that one's down. ASTS and Oklo, I don't think we have any earnings yet, but they are both slightly red in the pre-markets, or sorry, in the after hours. But no actual earnings yet from them. For AMAT, let's go to the key financial metrics real quick as we're looking at that. And we'll talk about HIMS and Tesla in a little bit. So AMAT, we got revenue 7.05 billion. That's up 5%. GAAP EPS $2.09. What's their PE? They're growing 5%. What's AMAT's PE? AMAT's PE is 21. Okay, that's reasonable. Growing 5%. That's not crazy. Price to sales of 5. It's not like this is one of those semiconductor stocks growing like 30, 40%. So relatively low PE. Annual revenue 27.7 billion. GAAP EPS 861. Cash from operations 2.5 billion. Record quarterly revenue and operating income. That's good. Guidance is slightly up from expectations. Yeah, I mean, it's not a horrible number. GAAP operating margin was 29% versus 29.3% for non-GAAP. I'm not sure if that's the best for that particular business, but it's not horrible. You don't have, SMCI type of operating margins at like 11%. All right, there you go. A down 4% is not crazy, but it's also not ridiculous, like down 10 or 15%. So market doesn't love it, but market doesn't necessarily hate it as well. Oklo is down 1.3%. All right, we're getting some red on Oklo. 1.3. Again, I don't even know what we're looking for when it comes to Oklo because they don't really have numbers. Let's go to their website. Let's just see what they say. Oklo, not up yet. We don't have the results yet. We should be getting them soon. Yeah, not out yet. It should be coming out really soon, but not on their website. Oklo's down 3%. They should be reporting right now. All these companies right now. Applied Materials now down 3%. ASTS up about 1.12%. Correct me if I'm wrong, but ASTS, people really started getting crazy after they got a deal with T-Mobile, right? And Verizon. That was like their big moment this year. So I imagine if they just announce more deals like that, ASTS also not on their website yet, or even potentially, revenue, that is what can get them excited. Oklo slightly coming back. Yeah. No, AMAT's still down 3%. Oklo now down 1.38. It was down about 2.4, but still no results yet. How did Palantir end for the day? Palantir had a relatively good day. Palantir, down 2.5%. Yeah, but it's still holding 59. We were touching 60 today as well. So, down 2.5 is not too crazy. 59.19 on Palantir. Rocket Lab had a pretty nasty day. Rocket Lab down 7.8%. Good day yesterday. So if you take out basically it was up 21% over the past 2 days. If you take away 7% from the 28% that it got yesterday. SMCI down another 0.5% after hours. Robinhood is up a little bit after hours. Tesla down another 1/3% after hours. We'll talk about Tesla. Bitcoin is 87.5. CrowdStrike was down 1%. Meta's down 0.5%. Palo Alto Networks was down 2% on the day. Oklo's out. Okay, Oklo's down 4%. Okay, let me see if their website has it. By the way, Trump has appointed RFK Jr. as the head of the Health and Human Services. That came out 20 minutes ago. Health and Human Services we have for RFK. All right, Oklo, we got some results. Let's see what we got. For Oklo. Oklo publishes third quarter results. Okay, this says nothing. I have to go to their actual press release, presentation, shareholder letter. Yeah, let's look at this. Okay, here we go. We are entering an era of unprecedented energy demand, rivaled perhaps only by initial conversion to electrification over a century ago. The world is now recognizing nuclear's role in powering that future. I'm confident we'll look back on 2024 as the turning point in our mission to deliver clean, reliable, and affordable energy for all. Momentum is building every week. Regulators are modernizing. Bipartisan support is growing, and some of the most influential companies are investing heavily in the space. That is the first paragraph from the CEO on what they're saying. Palantir transfers to NASDAQ. That's what you guys are saying is the headline. I don't know if that's a big deal, guys, for Palantir. I don't think that really matters too much. Does that matter? Well, Palantir is up. The stock market's reflecting that. Okay, I guess the market likes it. Okay, so hold on. Let's go to this. That's just going on another exchange, right? Oh, wait, does that mean, hold on. That's not being added to the QQQ, though. Is it? Does that mean they're added to the Qs? I think that does mean if it's added into the Qs, yeah, that is a big deal. That is a big deal. I just thought the NASDAQ was like another exchange that it's added to, but if it's being added into that index, I think that is a big deal. It means they're eligible to be added to QQQ. Okay. We got to get some clarity on that. Let me see if Twitter has anything. Then we'll go back to Oklo. Justin, Palantir says it's switching its stock listing to the NASDAQ from the NYSE. Oh, yeah. That's fair. Okay, that's big. That's big news. Decent news. That makes sense. Did they put a press release out on that? Let me see. Press release. No, there's no press release on that. But that is the news. That's why the stock is up. Well, so at its face value, that's good because if you're leaving the stock exchange to get onto the NASDAQ, which is another exchange, then you have the potential to get included into the QQQ, which has been down 4 days in a row. The Qs have all the best tech companies in the world. It is more heavily traded than the S&P 500. It gets a lot of inflows. I think it has more inflows this year. Yeah, it was number 7 on the list. S&P is like number 9. So a lot of tech investors obviously trade the Qs and they go long on the Qs. And also, that could be a reason why Palantir was pumping all the way to 60. If traders knew they were getting into the Qs, it's not like the S&P 500, but it kind of is more and more momentum. And so that could be a reason why Palantir has been up over the past couple of days. ASTS is up 4%. Oklo's down 4%. ASTS is up 4%. Oklo is down 4%. Gene typed in Warren Buffett in capital letters. What is the Warren Buffett's thing is out? I was like, why is it in capital letters, Gene? What's going on? Is it out? Hold on. Let's see. Is Warren Buffett out? Warren Buffett's out. All right, guys. I'm sorry for Oklo and ACS. We got to look at this, and then we'll get back to those. All right. Buffett's out. Buffett's out. Let's see what he did. Apple down by 25%. We already knew that, but that's okay. Bank of America down by 22%. We already knew that as well. Sirius down by 20%. Capital One down by 7%. Nubank down by 20%. Maybe that's why traders dropped it today after good earnings. They kind of knew Nubank was getting hit. Nubank stock right now after hours. Oklo down 3%. Nubank is up. Wow. Investors are happy Buffett's exiting or something. Nubank's actually up after hours. Charter Communications down by 26%. He bought Pool Corp, 404,000 shares. He sold 96% of his Ulta. Why did he buy Ulta in the first place if he was going to sell 96% of it? And he bought Domino's Pizza. He bought 1 million shares of Domino's Pizza, $500 million of pizza. That is a little, actually, Domino's did have a big dip last time on earnings. Domino's is up 9% after hours. Look at that. Domino's Pizza, DPZ, baby, up 9%. Buffett is back in Domino's. Well, I think he's in Domino's for the first time. I don't think he owned it before, but he's in Domino's. Wow. Domino's, if we look at their chart, Domino's had a nasty decline this year to date. Let's see if we can find that year. Well, let me just get it from here. Domino's had a really ugly decline on earnings. Yeah, look at this. On July 11th, it was 473, and then it got hit. So it looks like Buffett probably bought that dip right into Q3. It went from 473 to 415. Buffett might have been buying around this range, and now you got Domino's back up to 475. Domino's in the after hours is very close to where it was in July. So Buffett just bought Domino's. He traded Apple, or he got rid of some of this Apple, got rid of some of the Bank of America. We knew that. He bought Pool Corp, got rid of a lot of Ulta Beauty. I guess they bought it as a hedge against the lipstick recession, and the lipstick recession never happened, so that's not taking place. And then he sold 20% of Nubank. There you go. That's what you got in Bank of America. All right, let's go, or that's what you got in Buffett. Let's go back to Nubank, or let's go to ASTS and Oklo, and then we'll go back to all these 13 Gs. ASTS is now down 7%. It was up 4%. It's now down 7%. Oklo was down 4%. Now it's up 1%. Oklo is up 1%. It was down 4. ASTS was down or up 5. Now it's down 7 currently after hours. Palantir is up 2%. Let's check on Palantir real quick. Palantir is indeed up 2%. Yeah, $60.28. I think a lot of us were confused. Why was Palantir running into the high 60s? Maybe traders know. I mean, the street always knows, right? That they were getting onto the NASDAQ, and that gives them a chance to get into the Qs, which is why Palantir is currently up right now. ASTS now getting hit. Wow, Oklo's pumping 4%. ASTS down 10%. Let me put Palantir on this list so we can keep track of it. Palantir's up 1.77. Applied Materials down 3.5. Oklo is up 4. ASTS dumping down 11. Let's put Rocket Lab here to keep track of that. Rocket Lab is also falling with ASTS down 1%. Let's put Lunar on the list as well. Lunar is dumping 1% as well. For those that are just joining, Palantir is switching its exchange to the NASDAQ, and that gives themselves the eligibility to get into the NASDAQ ETF, which is the Qs. And that is very bullish because obviously if you're in the Qs, that index has to buy you up, and the more funds than inflows that the Qs get, they were the 7th largest ETF this year of getting inflows. Obviously, that is very bullish for all the companies in those ETFs. Basically, companies have to buy you, just like they have to buy you for the S&P 500. So that's what we're seeing right now. Okay, let me see if CNBC has some coverage on these guys, and then we'll get into the shareholder reports of Oklo and ASTS. Wow, Oklo's up 19%. Really? No, it's not. It's up 7%. Who said it was up 19%? It's up 7%. That's a lot, though. Still, that's a lot. That's not bad. Count. Okay. Yes. Okay, let's get applied materials coverage real quick, and then we will get into everything else that we got. Yeah, Oklo's up 6%. Oklo's up. We'll talk about Tesla and HIMS. We haven't talked about that yet. We'll talk about that in a second.
Folks, Applied Materials results are out. Initial move is lower by about 2%. Steve Kovac has the numbers. Steve?
Yeah, John, and that's despite beats here in the top and bottom lines. We're looking at a beat on earnings, $2.32 adjusted. Street wanted $2.19 adjusted. Revenues just slightly above estimates here at $7.05 billion. Street was looking for $6.95 billion. We see shares off about 4% here. We'll dig into what the guidance and so forth looks like, but that's what we're at for now, guys.
Up, looks like it's down about 4%.
Oh, down, sorry.
Yeah, okay. Just make sure we're looking at the same chart.
Down a little 4%.
We'll figure that out, Steve. Thanks. Brooke May, your take on these results so far? It looks like, not a big beat on the top line, but the bottom line was what the street was looking for. I guess the guidance is important here, the overall environment.
Yeah, right now you look and they're down 27% from.
Okay. So we'll go back to that in a little bit for applied materials, but let's just keep looking at some of the price action we got here. Oklo's now almost going flat, bro. ASTS down 6%, applied materials down 3%. Palantir is up 2.6% on this NASDAQ news. They probably said it in their 8K. Yeah, that's why. That's how the market's treated. Yeah, their 8K is likely. So that's why it wasn't a press release. They probably put it in their 8K, and that's how the market figured that out. Okay, so hold on. Let's get a couple things right here. So first off, the ETF for Qs, I just want to get this correct. The ETF for the Qs, we said the stat this year. The Qs have gotten, all right, to give you guys some context why this is so important for investors, the Qs have $318 billion in assets under management. So that's important. And this year alone, they were the 4th largest ETF in terms of inflows. With 27 billion added. I mean, that's a big deal. That's a 27.8 billion added this year alone. So if some of those inflows obviously are going to go into Palantir, right? If Palantir gets into the Qs, which it's not in yet. Oh, Palantir just 61 after hours. There you go, up 3%. Then that's obviously bullish for Palantir. Oklo's up 1%. ASTS down 9%. Applied Materials down 4%. Palantir up 3% on the day. Dude, that is kind of crazy. That is the good news is like continuing to pile in terms of momentum for Palantir. This was also bound to happen, right? Like we all kind of knew. I was, ironically, I was thinking about this the other day. I was like, the Q, because I was looking at a couple of ETFs like IGV that Palantir is becoming a larger percentage of just because the stock is going up. And so some of the software ETFs that have Palantir, I was wondering when the Qs would be part of this story. It looks like it's happening pretty damn soon. And that could explain the rise to 60s. A lot of people were like, this doesn't make sense. Valuation, yada, yada. I get it. But if it's not about, valuation, if it's about just momentum, this might be one of the reasons why. Okay, so there you go. There you go. That is what you got for Palantir. That is why Palantir's up right now. That is why Palantir's up 3%. Okay, ASTS down 5%. Oklo now slightly green. Slightly green. Okay, so let's go into Oklo's earnings again. So this was what we were reading from Oklo. Again, I'm just going to quickly look through their deck and see if there's anything interesting right here. We read the first paragraph. We know energy's big. The CEO is hyping up energy demand right here. The actual deck, so they talk about milestones. They talk about data center boom, drive shift to nuclear energy. Again, I think everyone should read through this because this is just important for us to get a better understanding of energy. We're not going to read through it today, but I just want to see kind of how they're highlighting it. Oklo is a partnership with Equinix. This is a company Steve was talking about that is a $25 million prepayment for a future 20-year PPA. So right there, they're announcing basically purchase orders, even though that's not revenue, which is okay. That's kind of what you have to do. Oklo has received 2 power purchase LOIs to provide up to 750 megawatts of energy. I think people knew that already, but that's important. And Oklo has received a non-binding LOI with Prometheus Hyperscale to supply 100 megawatts of clean power. So again, no numbers, but they're saying, hey guys, the numbers are coming, and that's why you should buy our stock because this industry is not going anywhere. And something that also might make investors exciting is that Sam Altman is the chairman of this company, and he's the chairman of OpenAI, the CEO of OpenAI, and maybe OpenAI hands them some contracts for more energy. They have 91 million in cash. They have 91 million in cash. That's what it looks like right now. All right, so that's what you got for Oklo. No real numbers, pre-revenue startup, but they are saying that, hey, the revenue's coming and the demand for AI is absolutely exponential when it comes to nuclear energy. We need nuclear. We need some source of energy. Oklo seems to have it up 1% on the day. ASTS, on the other hand, is just down 3.3%. Palantir up 2.84%. Applied Materials up 3.76% or down 3.76%. ASTS currently down 4%. Let's see if ASTS can give us some earnings on their website. Do they have anything? We still don't have anything on their website. Okay, so ASTS, we are still not seeing anything. 91 million in cash sounds like nothing. Correct. It is absolutely nothing. However, you're betting on the potential of Oklo. What is the market cap of Oklo? Oklo is 3 billion. Again, is that expensive? Yeah, it's very expensive. But in a market where everything's expensive, you are betting on something that has exponential growth associated with it. That's why I think Rocket Lab, although that's expensive as well, they got the boost they got yesterday because they're growing. And the street believes they have a big, big TAM to ultimately go after. Palantir is still up 2.7%, $60.78. Not bad on Palantir. This really explains to me the buying over the past couple of days. We saw this morning 53% of Palantir's float, for those that missed the news on the market open, is now institutional, which means 47% is retail for the first time ever in Palantir's history. 53% is the toots. I know the valuation is up there. I'm not saying it's cheap, but the big boys are buying, not retail. Retail did not move this stock up $50 billion in the past couple months. It was the big boys. I'm sure retail participated, but net buyers were institutions, and that is why Palantir currently is at $60.80, up 2.7% on the day. ASTS now down 7%. Oklo down about 1% after hours currently right now. What is Oklo's cash burn? I do not know. We'll have to go through some of the numbers. They do have their numbers at the end in the appendix, so I'll take a look at that in a bit. But they lost, 8 cents a share as well? I think someone said that as well. Yeah, negative 8 cents. So they are losing. Yeah, they're losing 8 cents per share, which is better than last year. Last year, they were losing 32 cents a share. So, they are improving in terms of profitability, even though they're not profitable. Yeah, even though they're not profitable. Yeah, John says the chat has more cash than Oklo. Oh, my gosh. Well, yeah, now that Palantir is at 60 and, retail is 10x, some retail. Yeah, maybe the chat does have more cash than Oklo. Okay, what else are we looking at? Let me see if CNBC has an update on any of these two companies, if they're talking about them at all. No, they're not big enough to get on CNBC. They're not talking about them. They're still talking about Applied Materials. I think we do have a Palantir update. Do we have a Palantir update? No. I saw an A&R on CNBC's headline, and I thought that meant Palantir, but it actually was dollar. Dollar had the A&R, not Palantir. Okay, so nothing on that yet. So let's get back to Data Roma. Let's get back to what Buffett is doing. That's the other big news this morning. For those that are just joining, we got Buffett's 13G out. Let me see if anything else came out besides Buffett. Oh, David Tepper. Oh, we got David Tepper. All right, folks, here we go. And we got Howard Marks. All right, so we did Buffett. We'll review him in a second. Let's do Tepper and then Howard Marks. Here's Tepper. Oh boy, we got a lot of stuff. We got a lot of stuff with Tepper. Tepper sold 5% of BABA. Now that's weird because he went on CNBC and he said to buy China. So why is he selling China? Unless he sold on the pump after he came on CNBC and said to buy China. Does anyone find that a little weird, or is that just me? So there you go. 5% down on BABA. He added 173% of Pinduoduo. He reduced 8% of Amazon, reduced 20% of Microsoft, reduced 33% of Meta, reduced 2% of Google, added 70% of JD. Okay, so he's being selective with China. He's adding PDD, adding JD, getting rid of BABA. So maybe that's more selectively choosing China. But then again, he said buy everything. So BABA is included in everything, but I guess he's being selective there. Reduced 21% of Oracle, added 100% of Lyft. You guys know how much I'm upset about Lyft because at $10, I was going to buy that thing. I was getting close to it too. And then I forgot about it. So Lyft right here added 100%. Looks like he was excited about Lyft and they crushed earnings. AMD down 17%. FXI, this is weird, guys. Why are you selling 16% of the China large cap ETF? He said to buy everything, if I'm not wrong. Why is he selling off that ETF? Sold off 14% of Baidu. What the hell is going on? What is going on? He said to buy China. I'll give him BABA, but why are you selling off the ETF and Baidu? Bought Vistra Corp, sold ET, sold Micron, sold Uber, sold Adobe, sold FedEx, sold United Healthcare. He's selling a lot of American companies. Sold Lam Research, sold Caesars. He's selling tech and semis as well. He sold 10% of his NVIDIA. He has 625,000 shares left. He sold 13% of TSM, sold 11% of ASML, sold 10% of Intel, sold 12% of EXE. And that's what you got for Tepper. That's what you got for Tepper. It does kind of feel like he's using the public as liquidity. I'm not going to lie, dude. That is very weird. I get adding to Pinduoduo and JD, and I'm not saying you have to buy everything in China, but look, you said buy everything in China. And he's selling BABA, FXI, and Baidu. Those are the three of the 10 largest stocks in China. How do you sell those? Like if you're saying buy everything in China. Palantir's up 4%. Palantir is up 4.3% on this news. Goodness gracious. 61.67 on Palantir. You know what Tepper doesn't have in his portfolio? Palantir. And a lot of these big guys made a mistake not getting into Palantir. All right, so that's what we got on Tepper. Let's see what else they can do. Again, he says go long China. A little confusing. He doesn't have to buy all the tech stocks in the world, but selling off the ones that you said to buy is very weird. Howard Marks. Let's see what Howard Marks did. Reduced 8% of TRMD. I don't know what that is. Reduced 10% of AU. Reduced 28% of Starbuck Carriers. I've heard of that one before. Added 57% of Liberty Global. Reduced 35% of Vail. Added 111% of INDV. Reduced 37% of JD. All right, so he's getting rid of some China. Added 35% to Trip.com. He bought Pinduoduo for the first time, so that's adding China. Bought Yum China Holdings, so that's adding China. And he added 83% to BABA. Okay, so he sold JD, but he added a couple other Chinese companies, and that's pretty much it. He added a little bit more of HDB, that's a bank, and reduced 42% of YPF. Okay, that's very interesting, dude. It's going to take a minute to analyze this. He's adding some China, getting rid of other China, but the opposite is happening with what's his name? Tepper, who's getting rid of a lot of China and adding small parts of it. David Dataroma. Dataroma.com. Tepper did not sell China. He bought China yet. Yes, he bought some parts of China, but he's selling other parts of China. Again, I'm being nitpicky here because he went on CNBC and he said, do buy everything in China. I don't know how you sell Alibaba when you say buy everything. Like Alibaba should be the number one company, or at least top 5 companies that benefits from China going up. So very weird that he sold off this one. So he did indeed sell off some of that BABA, and he sold off FXI as well. Palantir 61.81. It looks like it's trying to go to 62 after hours. 61.92 on Palantir after hours, up almost 5%. It was down 2.5% of the day. Tomorrow might be a decent open for Palantir, even though it's a Friday. If you assume they're getting into the queues right now, that is a big, big deal. Okay, so for those that are here, why is Palantir popping? Palantir is popping higher because they informed investors, I believe on their 8K, that they are now transferring from the New York Stock Exchange to the NASDAQ. When you do that, this gives them the potential to be added to one of the world's most popular tech-focused ETFs, the NASDAQ. QQQ has $318 billion in AUM. This year alone, they were the fourth largest ETFs in terms of inflows, with $27.8 billion added. And that is why the stock is up right now. The argument from the street, perception-wise, is Palantir will get a ton of those inflows. That's why they're up right now. Dude, it's really hard to be a Palantir bear right now. It's really hard. I mean, if you thought, all right, now's the time to short $60. This is ridiculous. Let me get in. This news is not helping. This news is not helping at all. Like, at all. For anyone who has an ambition to short this company, this news is just not helping. HIMS is up 5% after hours. Whoa. HIMS was, whoever bought the dip on HIMS, you're already up 5%. If you got around that $20 range, $21.75 on HIMS, up 4.32%. It was down 24% on the day. Now it is up 5%. Why is it up 5%? I have no idea. Is there an update after hours, or are people just buying? That is a bit weird. HIMS after hours. No, there's nothing. There is nothing. It's, I don't know if this is technical or something. There's no news. There's absolutely no news after hours. Again, the reason it was down is because Amazon is coming to telehealth services and they're launching products and prescriptions and subscriptions. That's why HIMS was down 25% was a little, I don't know. It felt like it was a little overdone. I don't know enough about the company, but it did feel a little like, all right, just because of Amazon. But the street did not like that news today. Now it's up 5%. Domino's, again, is up 8% because Buffett bought Domino's. How many shares did he buy of Domino's? Let's go back to Buffett. How many shares did he buy? And then we'll talk Tesla. And then we'll talk why Tesla is down. Oh, Bill Ackman's out. Uh-oh. All right, folks. Here we go. Okay, before we click on it, let's do a quick in the chat. Here's the question. A 1 if you think he added to Nike, a 2 if you think he sold Nike. Let's go. 30 seconds. 1 if you think he added, 2 if you think he sold. Let's see. Oh, this is going to be interesting. We know he sold a bunch of Google last time. And don't answer if you already clicked on it. Don't answer if you already know. You're going to ruin the surprise. I see a lot of ones. It's kind of 50-50 though. All right, here we go. Here's Bill Ackman. Added 435% to Nike. Oh my God. 16 million shares. Holy shit. He added 3 million shares last time. His stake is up 4x. He added 337% to Brookfield. He reduced Hilton, reduced restaurant brands, and then he kept Google the same. And then he bought SEG, Seaport Entertainment Group. And he reduced 0.5% of Canadian Pacific. Holy crap, bro. Hold on. Nike's got to be up right now. Nike's got to be up. There's no way Nike's not green on this. There is no way Nike is not surging right now, or at least a little higher. Okay, Nike's not moving. No one cares about Nike, bro. Either no one cares about Bill Ackman or no one cares about Nike, because everyone cares about Buffett if they're going to give Domino's up 7% on Buffett. Are they saying we don't care about Ackman right here? Whoa, bro. 12 million shares of Nike for what? Are we not seeing something in Nike? Nike stock right now, like nothing off this, $75. What is going on here? This is really interesting. I know Nike's down a lot year to date, so like he's definitely trying to buy something cheap. And I don't know if Nike's necessarily cheap, but it's definitely cheaper than it was in January. That's a lot, though. That is a lot. That is a ton of Nike, bro. A ton of it. 16 million. If I thought if he added, it would be like 1,500,000. 16 million shares. That is a ton. Palantir right here, 61.42, up 3.79%. Hims is up 4%. Nike up 0.5%. Domino's up 7% currently right now. Dan Loeb, third point. All right, let's go through him. Dan Loeb, third point. Let's see what Dan Loeb said, or let's go through his portfolio. Dan Loeb, third point. This is another very famous hedge fund. He sold 50% of his Microsoft, 50% of his Meta, and 30% of his Amazon. Okay, and 50% of his Apple. Guys, I think it is unequivocal right now. The hedge funds, at least the premier names on Wall Street, they're selling tech. They are selling tech. Buffett's selling tech. Ackman sold tech last quarter. These guys are selling tech. We are seeing a Tepper sold off a ton of tech. He bought ANSS. He added 30% to TDS. He bought CCO, Clear Channel Outdoor Holdings. He bought Hawaiian Electric Industries. He sold off 5% of Apollo. He bought Tesla. Oh, he bought Tesla. Whoa. Dan Loeb bought 400,000 shares of Tesla. 261. He's up nicely on that Tesla. Whoa. Okay, so sold Meta, Amazon, Google, and Apple, and bought Tesla. The rotation into Tesla after Q3 earnings, it looks like the price he got was right after Q3 earnings, or maybe right before the Robotaxi event. It looks like we got a rotation. Drago says he sold already. I mean, maybe these guys are in and out, they're in and out more than the burger. So maybe he's out, but he did add to Tesla. He sold Bath and Body Works, sold some of his TSM. He bought 71% in Live Nation, bought more of that. He bought Brookfield, just like Bill Ackman. Both of these guys bought Brookfield. He sold 7% of PG&E, and then again, he sold 30% of Amazon. What's the website I use? Dataroma.com. Dataroma.com. Let me put it in the chat. Dataroma.com. Where is Tesla? Oh, he said he sold Tesla? He said he actually sold it? I didn't hear that. If he said he sold it, then it doesn't matter. But I did not know if he said that. Tesla right here is down another 0.5% after hours. Tesla's down 0.5%. NVIDIA bought $64 million worth of shares of APLD during Q3. Whoa. APLD, I know this one. Applied Digital. They're up 5% right now. So NVIDIA bought 64 million of these guys. Why is Palantir up right now in the after hours? For those that are just joining, Palantir is up because they are going into they're perceived by the street to be going into the NASDAQ ETF. They are transferring where they are listed, and that's why they are up right now. Oh boy. Brookfield is a real estate company that owns lots of expensive commercial sites. Yes, Brookfield is one that Chris and Steve have told me about for a very long time. I don't know if they own it heavy, but this has been a name that has been out there. This is one of those stocks that's kind of like an OG stock. It has a lot of good free cash flows, profitable. It's one of those things that's going to be around for a long time. So it makes sense that is it a defensive? I would say it's kind of defensive. So it makes sense that some of these guys are getting into that one. Glenn Greenberg, let's see his portfolio. Glenn Greenberg, he also bought Dollar Tree, sold Amazon. Again, we're seeing some big techs get sold off. Sold United Healthcare, bought MasterCard, bought Moody's, bought Texas Instruments, bought S&P Global, bought Lennar, the home builders, sold a little bit of DR Horton, so that's another home builder. He kept Google the same, and he sold HCA Healthcare. He bought Ally Financial. Ally Financial had tough earnings a couple months ago, so he bought that one, and then he sold again a little bit of his UNH. Interesting. All right, let's see what else is there. Again, for those that are just joining Palantir, it looks like they're going into the NASDAQ, and that's where the stock is up right now. Viking Global Investors, let's see what they did. Viking Global Investors, they managed $27 billion. They added 15% to Adobe. They added 5% to Apple. They reduced 17% to Philip Morris. They added 442% of Spotify. You got to give them credit on that one. Spotify has crushed it. They sold off 10% of Microsoft, reduced 17% of Workday. They bought Bank of America for the first time, about $20 million. They added 22% to JP Morgan. They reduced 50% of their Amazon. They reduced 35% of their DoorDash, reduced 50% of Las Vegas Sands, reduced 40% of their McDonald's. They added to Vertiv, 307%. That's a big one. That's in the energy, or not the GPU data center space. They added to HCA Healthcare. They added 63% to their NVIDIA. Finally, we're seeing an NVIDIA. We have not seen Palantir on any of these names, and this is the first time we're finally seeing NVIDIA on this list. They bought Google, 1.2 million shares at 165. So they bought Google. They bought Starbucks, 1.6 million shares. They added 40% or 35% to Salesforce. They bought Eli Lilly, up 5.45%. They bought 436,000 shares of Tesla. 436,000 shares of Tesla, 261. And those are the main buys. Is Druckenmiller out? Is Druckenmiller out? Is he? Is he out? Oh, guys, we got a lot to go through. All right, here we go, everybody. We're not going to listen to Oklo, guys. If you want to listen to Oklo, you can go to their website. I think, not everyone here necessarily cares about Oklo, but if you definitely want to listen to them, you can go to their website. We're going to go through some more of these holdings. Again, Oklo, it's one of those companies that's very young. They're going to be talking about energy. They're going to talk about AI demand. They're going to talk about nuclear energy. They're going to talk about data centers. It's going to be a lot of talking about the potential. But, there's not really any numbers to take a look at. So if you want to listen to that, feel free to listen to it. We'll go through that tomorrow when I go through the transcript. All right, so Carl Icahn. Let's look at Carl Icahn. Here we go. Carl Icahn added 6% to his own stock, IEP. Talk about narcissism, Icahn Enterprises. That's a joke, but still, it's kind of funny. And then he added 38% to Centuri Holdings. That's it. Everything else, he's left the same. He still has 17 million shares of JetBlue, which a lot of people, were confused why he added JetBlue, but he added 17 million shares of JetBlue. Everything else is the same. That's it. That's it for Carl Icahn. Bill and Melinda Gates. All right, here we go. Bill and Melinda Gates. Let's see what they did. For those that are wondering why Palantir's up right now, it looks like they're going to be added to the Qs today, or not today. In a couple weeks, they're switching to the NASDAQ from the New York Stock Exchange. That is why Palantir is up. How much after hours? Palantir is up about 3% after hours. The market's excited that they might get into the Qs. 3.6% for Palantir currently in the after hours. All right, Bill and Melinda Gates. Here we go. Sold 17% of Microsoft. Sold 10% of Berkshire. Sold 8% of Waste Management. Okay. Added 65% to FedEx. Okay. And they bought Paccar. I don't know what that is. PCAR. Paccar. The heck is Paccar? Paccar stock. An American company primarily focused on the design and manufacturing of large commercial trucks. Okay. Obviously, they did not buy Tesla. But that's it. Kind of boring as well. Nothing too crazy. So they sold some tech, sold some Berkshire, sold some Waste Management, added FedEx, and added Paccar. They left Walmart, everything else, Caterpillar, Deere, all that stuff the same. That's it. That's what we got. That's what we got for Bill and Melinda Gates. David Einhorn, he was on CNBC yesterday. Let's see what he did. David Einhorn made some moves. He added 10% to Penn National Gaming. Wow. Gambling, huh? He's getting into that. Added 5% to HPQ. Sold off 51% of Tenant, sold off 28% of ODP, sold off 6% of Live Nola, sold off 25% of GPay Key. This is no. Palantir will still be at the S&P. Nick, thank you for the super chat. Palantir will still be in the S&P. It will just also be in the Qs, just like Google is in the S&P and the Qs. So this is net bullish because it's going to be in two very, very, very big ETFs. And I believe someone in the chat said the rebalancing day is December 20th. So December 20th, if Palantir gets added into the Qs, then that's going to be a big day for Palantir. And then he sold 60% of DNMR. Wow, David Einhorn doesn't own any tech at all. He owns like zero tech. I did not know that. He manages 2.4 billion, zero, like there's like no tech in this at all. The GoPro, if you want to count that as tech, but there you go. All right, so that's what we got from David Einhorn. Iman, thank you for the $5 super chat. Let's say you have $30,000 right now. What would you put it into to do a 30x or 100x? Iman, I cannot answer that question. I wouldn't expect a 30x or 100x in any stock currently right now with that 30K. I would DCA into something that long-term you feel comfortable owning at any price. That's what I would do with the 30,000. And that depends on, the companies that ultimately you want to research. But 30x or 100x, you're not going to get that easily in just one single stock, unless it's over the long term, right? But not overnight. Palantir right here up 3.7%. Let's see if CNBC is covering this Palantir news at all. This is big news, guys, into the Qs, and this matters. Let's see if we have anything on this. Okay, so we have some 13G, 13F stuff from CNBC. I'll try to get some more Palantir stuff, but let's get to this, and then we'll get into some more Palantir stuff.
William Kerwin, thank you. Well, the 13F for David Tepper's Appaloosa is out. Our Leslie Picker has details. Leslie.
Hey, John. Yeah, I look at this 13F and I just see a lot of selling across the board. Adobe, that position slashed by 44%. FedEx down by 32%. Meta also down by about a third. Microsoft slashed by 18%. Selling a bit of Alibaba, Alphabet, Amazon, Baidu, Chesapeake, Energy Transfer, EQT, Micron, and more selling out of Boeing. You kind of get the picture here, but there were actually some sizable additions as well. PDD Holdings nearly tripling exposure there, and JD.com up by 69%. And Appaloosa's stake in Lyft doubled to about $200 million during the quarter. And the firm bought new smallish for the firm stakes in Las Vegas Sands and Wynn. Now, a reminder, guys, these are as of the end of September. They may have changed in the 6 weeks since, but again, a snapshot from Appaloosa's 13F filing that crossed moments ago.
Interesting, especially because Adobe, for one, just moved above its late September levels over the last few days. Leslie Picker, thank you. We'll look forward to more from the 13Fs. Well, emerging markets have significantly underperformed the S&P 500.
Okay, so that's what you got from David Tepper. Let's see if they're talking about ASTS or Oklo at all. No, we got some other news on Bill Ackman. Let's take a look at that, but they are not talking about Oklo or ASTS at all. Okay, let's get this update. Nike, Bill Ackman, a lot of shares that he added.
Picker for those details.
Hi, Morgan. Yes, Bill Ackman's firm Pershing Square building positions, 2 new positions from last quarter, building throughout this most recent quarter. One of those is Brookfield. Last quarter had about a $285 million stake. That has since been boosted. Of course, the shares have moved too, but now that stake is worth about $1.7 billion as of the end of the quarter, as of the end of September. In addition to that, Pershing Square boosting its stake in Nike by about 436% to hold about $1.4 billion in Nike by the end of the quarter. So some interesting moves, clearly building on some stakes that were acquired during the second quarter of the year. But you can see those shares up about 0.4% each in after hours trading, guys.
All right, Leslie, thank you. Well, now let's get a CNBC News update with Kate Rogers. Kate.
Hi, John. Sources tell NBC News the U.S. ambassador to Lebanon is submitting.
Okay, cool. Michael Saylor live on CNBC. Okay, let's go to that. That is, oh yeah, here we go. We got Saylor. All right, let's take a look at Saylor, folks. Let's see what he has to say about Bitcoin.
In an exclusive interview is Michael Saylor, co-founder and executive chairman at MicroStrategy. He is joining us from the Cantor Crypto, Digital Assets, and AI Infrastructure Conference in Miami. Michael, it's great to have you on the show.
Yeah, thanks for hosting me, Morgan.
So I'm going to start right there. The torrid run we've seen in Bitcoin, is this all just anticipation about what a Trump administration is going to mean for it?
You know, the red wave is probably the biggest thing that's happened in the past 4 years for Bitcoin. It's incredibly auspicious for Bitcoin and for the entire crypto industry. But we're also getting a lot of very constructive support from Wall Street. BlackRock has been a very, very strong voice articulating the Bitcoin value proposition. And of course, MicroStrategy on October 30th announced that we were going to raise $42 billion to buy Bitcoin. And that's the same as saying we're going to buy every Bitcoin mine for the next 3 years at $85,000 or more Bitcoin. So there's a lot of bullish things going on in the market right now.
And I do want to get to that audacious $42 billion fundraising plan of yours. But first, there's a lot of regulation and regulatory aspects that are in focus with the Trump administration coming into play. SEC chairman, for example, a lot of expectations that Gary Gensler is going to step aside. And I realize Bitcoin itself is governed as a commodity, unlike other cryptocurrencies. But when you're talking about the ETFs and when you're talking about the cryptocurrency exchanges and when you're talking about companies like yours, MicroStrategy, which is publicly traded, it is SEC. So how important is that appointment going to be? And who would you like to see at the helm?
Well, I think whoever chairs the SEC has probably the most pivotal role in the entire digital assets industry. I think this is incredibly bullish for digital assets. It's very good for the crypto industry. We're going to see a lot more pro-Bitcoin policies. We're going to see a digital assets framework. We're going to see an end to the war on crypto. we're going to see a lot of pro-Bitcoin, pro-business policies. And I think that clearly the SEC will be a big part of it. So it's above my pay grade to have an opinion on who it's going to be. But I think it's pretty clear the House, the Senate, the White House, they're all very pro-crypto. So I expect that we'll have a very supportive head of the SEC.
Michael, well, as well as you've done buying Bitcoin, I'm not sure anything is really above your pay grade at this point, which leads you to the question, what do you think is the biggest threat to Bitcoin's price staying above 60K? What potentially causes another dive below 30K?
Yeah, I don't think it's going to 60K. It's not going to 30K. I think it's going to go up from here. I'm planning the 100K party. And I'm thinking it's probably going to be New Year's Eve at my house. So I would be surprised if we don't go through 100K.
Wow. 100K by New Year's Eve. I mean, that would make New Year's Eve very, very exciting if that happens.
In November or December.
So then what's the biggest threat to it going lower, even if it doesn't get that low?
I think the biggest uncertainty in the industry was November 5th. And would you have a blue wave? Would you have a red wave? Or would you have a split Congress? And would you have any dispute about the future of crypto assets and Bitcoin? I think that was settled by the people very decidedly on November 5th. And I don't really see any threats in the near-term horizon.
A strategic Bitcoin reserve, how likely is it that that is actually established? And why would that be a good thing when you're talking about a decentralized asset now being stockpiled by a centralized government?
Well, that's being sponsored by Senator Lummis from Wyoming, and she understands the value of the frontier. The United States was built by purchasing Manhattan, then we purchased the Louisiana Territory, then we purchased California and acquired Texas, and then we bought Alaska. The next great frontier is cyberspace, and the obvious thing to do is to own cyberspace, buy the future. And so I think it's a great idea. I think it will happen. And I think it's important to the United States because it cements the United States' control over the future world reserve capital network. Senator Lummis's bill will offset $16 trillion of our debt, according to my models right now. So I think it's economically wise, it's technically wise. And again, Bitcoin is manifest destiny for the United States.
So with your most recent acquisition of 27,200 Bitcoins, it looks like you now, based on my calculations, own about 1% of the Bitcoin supply. You just talked about this $42 billion fundraising plan. This would be a record-breaking plan. Half of it in at-the-market equity offerings and half of it in new debt securities. How will you carry this out, and why is now the time to go to market with something like this?
Well, all of our investors tell me they want me to buy more Bitcoin. They want me to raise capital to buy Bitcoin. And their number one concern was, are you going to stop issuing equity to buy Bitcoin? And so we were actually addressing their concerns. We did raise $2 billion to buy 27,000 Bitcoin just in the first 10 days of November. So we're moving fairly aggressively on it. I think our exact rate will be a function of the capital markets, but right now they've been very enthusiastic. So our plan is 3 years, but it's possible we'll do it much before then.
Okay. Michael Saylor of MicroStrategy. Great to have you on. Thank you.
Thank you, Morgan.
All right. So we just got the press release from Palantir for the NASDAQ listing requirements. Guys, this is incredible. This is freaking incredible. What am I doing for New Year's? I am going to be partying with Saylor, hopefully for this $100,000 Bitcoin, baby. I mean, this would be incredible. Here you go. Palantir announces transfer of stock exchange listing to the NASDAQ. Palantir today announced that it will transfer the listing of its Class A common stock, the common stock, to the NASDAQ Global Select Market from the New York Stock Exchange. The company expects to begin trading as a NASDAQ-listed company on November 26th, which is about 2 weeks from now. And its common stock will continue to trade under the symbol PLTR. Upon transferring, Palantir anticipates meeting the eligibility requirements of the NASDAQ 100 index, which is the QQQ, baby. Palantir up 3.13% after hours. That's what you got on Palantir. All right, so we've talked about a lot of stuff. To summarize, we still have a lot more topics, so Don't go anywhere. We got a lot to discuss. We're like on TV. Don't go anywhere. We got stuff to discuss. First of all, Buffett bought $500 million worth of Domino's. Bill Ackman bought 12 million shares of Nike. Palantir now in the queues. David Tepper sold some China, bought some China. Howard Marks also buying some China. And Berkshire and some of the other ones, some of the other big firms didn't really do, or not Berkshire, Bill Gates and some of the other funds like David Einhorn really didn't do anything that was that unique or something that we didn't know. Now let's talk about Tesla. And let's start it off with this $10 super chat by our good friend Derek Wall. Derek, thank you for the super chat. Tesla Q. So if you don't know what Tesla Q is, it is a short Tesla ETF, which today is up 11%. Why is it up 11%? Well, it's 2x leverage short against Tesla because Tesla is down 5.7%. Now, why is Tesla down? The reason Tesla is down, and it's interesting because a lot of people thought this was not going to be bearish, but at least the market definitely felt this was bearish today. The $7,500 EV subsidy is getting ready to be gone. So this is what we're looking at right here. This came out from Reuters today. It was confirmed by multiple sources. It does indeed look like that $7,500 tax credit. One of the only reasons I bought a Tesla, because I can tell you right now, I absolutely would not have bought the Tesla if I didn't have that tax credit. That is going away. Trump made campaign promises about increasing automobile manufacturing, saving jobs in Detroit, etc., Michigan. So this is one of the ways that even if this doesn't work symbolically, Trump kind of has to do this to plan out his, to make right on the campaign promises that he had. Also, apparently Tesla representatives were supporting ending the subsidy. That was confirmed today as well. And so the market's kind of like, wait a second, we love Elon and Trump together. We think Elon has full access to Trump's ear, but this is not good. Now, the bull case on this is that other EVs are going to struggle to stay alive without the subsidy. And this is what Elon has hinted at as well in regards to Rivian and Lucid and NIO and Chinese auto companies, if they ever wanted to come to China. It's hard to get people to buy without that tax credit. The bear case is that, wait a second, EV demand takes a very broad hit. Again, I'm the case study. I would not be having a Tesla today without that tax credit. And I would classify myself as a relatively regular person. So without that subsidy, that could hurt Tesla sales. Now, why is that bad? On the earnings call, Elon said expect 20 to 30% growth when it comes to vehicle deliveries. This year, it's going to be maybe 1 to 2%. Actually, I think it could get closer to 5%, maybe, because in Q4, people might do the same thing that I just did, which is, hey, let me get this Tesla because next year I'm going to have to pay $7,500 extra. So there is an argument that Q4 could be a massive quarter for Tesla, but the street doesn't care because Q1, Q2 might end up being bad. And so that is why Tesla's down right now. Now, here are my thoughts on it. I'm curious to see what you guys have to say. As Rodolfo says in the chat, Elon has said they don't need subsidies. So this is my perspective on it. I am cautiously bullish about this, and I think it's okay that this is happening. Now, look, if you went short today and the stock went down, then you're winning today because the stock market definitely is not bullish on this news. However, the reason I am saying this might not be that big of a deal in the long term, not in the short term, first couple quarters in 2025 might suck if this hurts EV demand. But in the long term, the reason I think it's okay is because Elon knew this was coming. He previously said it wouldn't be a big deal for Tesla. And I mean, why would Elon have endorsed Trump if he thought this was going to be a catastrophic event for Tesla? There's no way. I mean, I know he loves free speech and all that stuff, but I think there's no way Elon would have endorsed Trump if this would have happened, or Elon would have talked to Trump. And Elon would have tried to get him to actually give us the subsidy. I think Elon realized, wait a second, this is going to hurt the other companies. We have the $25,000 to $30,000 model coming out in second half of 2025. So hold on. People can afford a $25,000 to $30,000 car. People can't really afford a $55,000 car, which is why you need that $7,500 subsidy. My Tesla Model Y with the New Jersey subsidy ended up being about $45,000. So, that's expensive for a car, but that's reasonable, especially if you have a 0% APR. Like that's reasonable. 55, 60,000 gets a bit unreasonable. So if they're coming out with a cheap car and people are going to be able to buy that car, and there's no way Rivian's going to stay alive if Rivian doesn't have the subsidy, then you kind of have this regulatory capture where all these other EVs, I don't want to say die out, but maybe they die out, and then Tesla's the last one standing. As John says right here, this might end up being a 4D chess move. Holy crap. Trump picks Jay Clayton for chairman of the U.S. Security and Exchange Commission. Oh my goodness. Duck, is that confirmed, Duck? Is that confirmed? Is that confirmed? Dude, we're trying to get from one topic to another topic, but we got so much damn news. Is that confirmed? Jay Clayton? That's the guy on CNBC every morning, bro. Oh my God, they're picking him. Whoa. Are they actually picking him? Some of these Twitter accounts are saying, no, did he? Yeah, Trump tweeted it, or Trump put it on Truth Social. Okay, is Bitcoin up on this news? Is Bitcoin bullish? This guy, I don't know if he likes Bitcoin. Does Jay Clayton like Bitcoin? Dude, why did he pick Jay Clayton? I thought he was going to pick Dan Gallagher, the Robinhood guy. And that's okay if he didn't pick the Robinhood guy, but does Jay Clayton like crypto? Hold on. Let's just type in Jay Clayton crypto and just see what pops up. This is weird, bro. This is very weird. Jay Clayton, he is like Republican. We know that. He was a former SEC chairman. I don't know. I think he's high. I think he's neutral on crypto. I don't know if he's super bullish, but okay. So we got to figure that out. He does not like crypto. Doug says as long as he doesn't hate Bitcoin, it's all good in the hood. I mean, but not hating yes, we want him to not hate Bitcoin, but we also want him to actively endorse it, right? Robinhood's down about 1/3% right now. Where's MicroStrategy? Like, we want him to be super pro crypto. Like, this is, dude, I don't think we're getting another president unless we get JD Vance in the next 20 years that is this pro crypto as Trump. And I know Trump doesn't really give a shit about crypto because like he just campaigned on it. Also, we got to remember, Trump has his own altcoin. Trump has his own altcoin. Are we forgetting Liberty Financial or whatever the hell he launched like a month ago? Like the dude literally has his own crypto. Like he cannot be not bearish on crypto. This makes no sense, bro. So we need someone in the White House that actually understands crypto. Jay Clayton, I don't know if that's the guy. Tesla's down another 1%. MicroStrategy's down 0.2. Tesla Q's up another 2% after hours. Palantir's still up 3.38. Qs are down a little bit. Rocket Lab's down a little bit. Hims is up 5% after hours. Nike's finally up 1%. Domino's up 8%. And Bitcoin's chilling at 88,000. Oh boy. We sure this is confirmed? Yeah, it's on his Truth Social. It's confirmed. It is confirmed. I'm pleased to announce that Jay Clayton of New York, the chairman of the U.S. Securities and Exchange Commission during my first term, where he did an incredible job, is hereby nominated to be... Wait a second. Hold on. Why did he say he's nominated to be the U.S. attorney for the Southern District of New York? Wait, hold on. Is that the same thing as new SEC chairman? Oh, that's wrong. That's wrong. It's wrong. Jay Clayton picked for U.S. attorney, not SEC. That's wrong. It's wrong. Let's go. Yes. That's good. Holy crap, dude. What a market close, baby. That's wrong. It is wrong. Whoever reported this first is wrong. W's in the chat for that, baby. We got a chance to keep crypto alive in America. Look at that. It was a Reuters error. Love Reuters, baby. Love Reuters. Reuters error. Clayton says he's pro crypto. Dude, I don't trust anyone except Dan Gallagher. I'm sorry. That's the only man I trust because he's actually worked at a crypto exchange. Like, you need someone from the inside, bro. We don't need these people that say one thing, do another. We need someone who actually has experience with crypto policies because they've worked at an exchange that is affected by crypto policies. We don't need any of these talking heads or consultants that think they understand crypto. Now, I don't know if Dan Gallagher is going to get it, but I definitely didn't think Jay Clayton was the guy to get it. Also, so in terms of Gary Gensler, so I forgot to share this. So this right here, now it looks like Gensler's resigning. Why does it look like Gensler's resigning? Because he put out this statement today to his SEC staff. He didn't say he's resigning, but take a look at this. Before I close, I want to say something about the SEC and its staff. It's a remarkable agency. The staff and the commission are deeply mission-driven, focused on protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. The lawyers, accountants, economists, and policy experts and other staff generally could make more money working somewhere else. They choose, though, to work on behalf of the public here at the SEC. It has been a great honor to serve with them, doing the people's work and ensuring that our capital markets remain the best in the world. Again, look at that. It's been a great honor to serve with them. To me, that sounds like he's done. To me, it sounds like it's GG. He's done. It's been a great honor to serve. I think that's him basically saying I'm out. I think that's him saying I'm out. So to me, I think he is out. Clayton sued XRP in his tenure. He is not pro crypto. I didn't know that, but if Clayton actually sued Ripple in his tenure, as he was one of the commissioners before in the SEC, that is not bullish at all. Bitcoin's getting a little bit of a pump as that move was corrected from Reuters. Palantir up 3.65%, Applied Digital up 5%, Domino's up 8%, Nike's now up 1%. Nike getting a little bit of love after Bill Ackman bought 12 million shares of Nike. We are not listening to ASTS or Oklo. If you guys want to listen to it, you can just go to their investor website. We're not listening to those calls. Again, guys, those companies are, they're not really real companies yet in terms of producing revenues and all that stuff. So if you really care about them, you can listen to them. But we got a lot of news we're going through right now. So it looks like Gensler's out. It looks like Gensler is completely out. And that's important. ASTS, are we down 12%? ASTS is indeed down 12%. Let me at least see on their website. We never got to see the results because they never posted it. ASTS IR. Let's see if that's out. Amit, will you host a party for $100 Palantir? Dude, I think we got to do Vegas for $100 Palantir. I think we have to. I think there might be like a little retail thing that Iliano's setting up next year. Maybe we're going to see, but I think he wants to do something for retail investors. So next year, I think a lot of people will have a chance to meet. Okay, so here's their deck. Again, still no revenue, right? This is the deck. It's just a bunch of pictures of like Mars and shit. And like, they're selling a vision right now. That's okay, but it's not like a fully real thing yet. That's all right, but they don't have earnings per share. They don't have any of that stuff yet. They're spending a decent amount of money though, so they can definitely show how much spend they're doing. Yeah, they're showing their expenses. That's the first numbers we get: stock-based comp and operating expenses. That's the last slide. That's it. So there's really nothing to really analyze here. Stock is down 12%. I don't even think it's based on numbers. I think the stock's just down because people are taking profits because the stock was up a lot. So that's why the stock is down 12.16%. Again, remember the stock was up a lot this year, so people are taking some profits if they expected them to announce some stuff today. Going back to Tesla, so I was in the middle of Tesla before Reuters wanted to put out this Jay Clayton stuff. So here's my take. I think it's kind of bullish. If you get rid of the EV subsidy, you're going to get a decrease in sales. But if you have regulatory capture and Rivian, which barely can produce cars at scale right now with no margins, if they end up dying out or if they go out of business or if they really start struggling, you're going to have people default to a Tesla. So Tesla might end up becoming a car that the wealthier part of the American class starts to be able to afford again. But at the end of the day, if that creates over the next 4 years a pseudo monopoly for EVs when it comes to Tesla, which Tesla already kind of has one, but like it makes it even more consistent for them, and you have that $25,000 car coming out, then maybe that subsidy doesn't end up being a big deal, and Elon can get other benefits like fast tracking FSD regulation, which he probably cares way more about than people buying a Model Y for $45,000 versus $55,000. I mean, at the end of the day, you're not buying Teslas because someone like me is buying a Model Y. You're buying Teslas because someone like me will one day buy FSD and then put my Tesla on the robotaxi network in New Jersey. And while I'm doing the market open, my Tesla is making money for me. That's the reason you're buying Tesla, right? And so I kind of think it doesn't matter. I kind of think Elon doesn't care too much about it, but short term, it definitely is bearish for Tesla right now. Karthik says, without the incentive, I would not buy any EV except if Tesla can come with a cheaper model. Yeah, there you go. There you go. Without the incentive, it would be very, very difficult to get people to buy that EV. Just because it's expensive, dude. The average person does not have 50 grand, 80 grand to drop on a car. Like, it's a different type of America, bro. Most people are not doing that. And if they do have that money, they're really thinking twice of, hey, should I be doing this on a car at the end of the day, or should I put it somewhere else? So you need that incentive. In Colorado, in Massachusetts, you can get a Tesla for $24,000. You can get $17,000 of EV credits in Massachusetts. I know you guys are going to make fun of me for saying it, but I had to say it because that's the actual state. So you can get a Model 3 rear wheel drive, the cheapest model, for 25 grand after all the subsidies. So that state is very bullish for EVs, but that's not every state in America, right? In New Jersey, I got an extra $2,000 off, but that's not federally. And so that could damper some of their sales. Domino's up 8%, Nike's up 1%, Palantir still up 3.8%, trying to close in on $62, $61.44 currently right now. Didn't Tesla say H1 for the new affordable model? Yes. So I would imagine by like April or June, we're going to get April, May, or June, that $25,000 car, which is going to be bullish. Elon wants to make a whole lot more money for selling FSD and the margins on that than he does for selling Model Ys. Yeah, I mean, look, that's the argument here. Now, granted, look, if Trump was here's the thought experiment here, right? If Trump loved EVs, let's say Trump was like, I love EVs, and Trump didn't want to get rid of the $7,500 tax credit, do you think Elon would go up to him and be like, hey, Trump, please get rid of it so that we can crush our competitors? No way in hell. Elon's putting up with this. Elon doesn't love this, but he's putting up with this because he has a master plan. And, you can interpret FSD and autonomy as like that long-term thesis. So this $7,500 doesn't matter, but it definitely would be net bullish for Elon to be able to fast track regulation by having Trump in his back pocket, and Trump also not hating EVs. And I know Trump doesn't hate EVs, but you get my point, by getting rid of this subsidy. Like, the subsidy going away is definitely not bullish, but I also don't think it has to be bearish long-term. But short-term, the market is saying that it's definitely a bit bearish. Just me 2B says, Amit, thoughts on why no super investors are buying Palantir? The super investors didn't, they didn't get it when it was 6. They didn't get it when it was 7. They didn't get it when it was 10. And they definitely don't get it right now. So we do have institutional ownership going up for Palantir. It's just not going up from the David Teppers of the world. I want to see if Stanley Druckenmiller's info is out. That is a big one. That is not out yet. Stanley Druckenmiller, we are waiting on that one. Value Act is out. They managed $3.9 billion. Let's go to Value Act. Value Act right here. Added 21% to Disney. Where did Disney end today? Disney was up 10% in the morning. Disney ended up 6%. Okay. Added 340% to Roblox. And they sold off their Expedia by 23%. They bought Meta. We heard about this the other day that they were buying Meta. They bought Live Nation. They bought Visa, and they bought Liberty Media, going in with Buffett on Liberty Media, aka SiriusXM. So bought Meta, bought Visa, bought Live Nation, bought Disney, bought Roblox, sold off a little bit of Expedia. Roblox is an interesting one. That stock has done very well, even though Hindenburg tried to short them. Hindenburg got SMCI right. They did not get Roblox right. Roblox has done Roblox was stuck at 34 for a good amount of time. Now it's right here at 52.73 currently right now. Tesla down another 1% after hours at 308. All right. So question for the chat. Do we see a 2 handle on Tesla in the next 2 weeks? Yes or no? Yes or no? Do we see 2 hundos for Tesla in the next 2 weeks? Do we see 2 hundos for Tesla in the next 2 weeks? Or is this $8 margin protecting us from the 200s enough to keep Tesla above water? I mean, dude, Tesla's at 360. It's taken a pretty big hit. It's not like this is a small decline, but it is a little bit of a hit. We got some breaking news on Elon and Iran right now. Elon Musk met with Iran ambassador. All right, let's take a look at this.
Posted in the past couple of moments reporting that Elon Musk met in New York on Monday with the Iranian ambassador to the United Nations in a session that is described as attempting to defuse tensions between the United States and Iran. The New York Times now sourcing this to Iranian officials, saying the Iranians said the meeting between Mr. Musk and Ambassador Amir Saeed Irvani lasted more than an hour and was held at a secret location. The Iranians, who spoke to the New York Times under the condition of anonymity, said the meeting was positive and described it as good news. So this raises the question now, John, of Elon Musk being involved in more than just the future Trump administration's efforts to cut federal spending. Obviously, that announcement made official earlier in the week, but also conducting international diplomacy now on his own, and not really clear yet just how much authorization he had from the Trump team or from the existing Biden administration to conduct these meetings with the Iranians, but in an effort apparently to lower tensions between the United States and Iran. This represents a significant expansion of what we know about Elon Musk's role in this Trump transition. John, back over to you.
Well, Elon Musk is known to expanding things for sure. Eamon Javers, thank you. Well, up next, top cybersecurity executives on the...
Okay, Elon doing everything he can to get the entire world on his side currently right now. NVIDIA's 13F, again, we already talked about it. They bought 7 million shares of APLD, Applied Digital. They still have the same number of SoundHound. So for all the SoundHound builds, they didn't add more to SoundHound. They have the same level of Serve Robotics, the same amount of Recursion Pharmaceuticals, same NanoX, and same amount of ARM holdings. Only change was on Applied Digitals. Everything else stayed the same. So no other changes. All right, what'd you guys say? Tesla 200 or no? Most of you are saying yes. Most of you are saying yes. Karthik said I sold puts at 300. All right, well, might be time to buy some Tesla at 300. Eric says Ford might as well cancel the Lightning altogether. Yeah, didn't they say they were stopping production a couple weeks ago? I feel like, or they're stopping production in certain areas. Without the tax credit, I'm not sure that many people want to get or buy the Lightning as much as before. Yeah, that's going to definitely be something that they have to think about. The Mach-E from Ford as well. Ford Lightning F-150 stop production. Let me see. They're stopping production from November 15th to January 6th. The pause is due to lower than expected demand for electric vehicles. Yeah, I thought so. Yeah, they are definitely stopping production for the next 2 months. I saw that article. Yeah, no, October 31st. That's when they announced it. They're temporarily halting production of the F-150 for the next 2 months due to lower demand. That is the reason why they're stopping it. Okay, we need Stanley Druckenmiller. We need to see if he added more Palantir. I'm very, very curious about Drux. He's the only guy out there that is on our side when it comes to Palantir. Pretty much every other. Oh, Renaissance. Someone said Renaissance added SoFi. Let me see if I can. I want to see if I can pull them up. Renaissance. I would definitely want to see if they added, or someone said, I think they said they sold SoFi, not added them. Well, we got to see. We looked at Howard Marks. We looked at Michael Burry. He added more of China. We looked at Dan Loeb. We looked at David Einhorn, Carl Icahn, Bill Gates. Li Lu, I don't know who this guy is, but I'm sure some of you guys know him. He manages $3 billion. They sold 50% of their Apple. They have Google, Bank of America, Berkshire Hathaway, Oxy, and I think they kind of just followed Buffett here, selling off some of their Apple, and they bought SOC, Sable Offshore Corp. They added SoFi. Okay. They're a quant, so it doesn't matter. I mean, but they do have long positions. I know they're a quant, but Renaissance still, like, they're like the third largest shareholder they were of Palantir. They had like 40 million shares, and I think they've held it. I definitely want to see if they sold some Palantir, because Q3 is when Palantir kind of ramped up, right, in terms of the stock price. HIMS is up 6%. Yeah, HIMS was down 20%. So again, why was HIMS down today? HIMS was down because Amazon is perceived to be getting into their business with telehealth, and that is why HIMS was down 25%. I personally feel, okay, I don't know enough about this company, but 25% is a lot to go down just because another company comes into your space. I mean, realistically, I think the market's saying we don't believe HIMS has a moat to take it down 25%, but it's up 6% after hours. So you got some people that are saying this is stupid and they're buying it right here. And that's why HIMS is up right now. Alphabet added FRSH. Rushab, if you have the number of shares there, can you please tell me that? FRSH. What is this? FRSH. Freshworks Inc. $5 billion company. They're up 2% right now. What is Freshworks? I feel like I've heard of these guys. Freshworks stock. A cloud-based software as a service company founded in India. IT service management. Okay. Looks like Google adding a little bit more of another cloud provider. Palantir joining NASDAQ. Yes, Palantir is joining the NASDAQ. That is why. Now, remember, Palantir is not in the queues yet, but by being on the NASDAQ, they have all the obligations met to be added into the index. I don't know why the index wouldn't want to add them, because, I mean, like, Palantir is the hottest stock of the year, right? Like, and it's a tech stock. Why wouldn't you add them? So now maybe that's another reason Karp was selling shares, bro. Maybe Karp was selling shares to institutions that need to add those shares before they get into the queues. I mean, that could be an argument as well, that he was selling to toots that were ready to buy in order for Palantir to get into the queues. What Palantir is showing right now, quite frankly, is that I know 140 billion sounds crazy to people, but what it's showing is that momentum matters way more than valuation, and that things can be expensive for a long time, but if it has momentum, if it has the energy, and if it's re-accelerating growth, again, if they didn't accelerate growth in Q3, I don't think Palantir would be a 60, but they did. Maybe not as much as some people wanted, but they did accelerate growth, and that is proving to have big investors excited to be part of that story. And if it normalizes at 50, then you're going to have Palantir continuously be expensive for the long term. Every time Carp sells, it goes up. Yeah, either Carp is selling to institutions and he has to deal with them, or he just sucks at getting a good deal, because every time he sells, this thing just goes higher. It's actually hilarious, bro. Every single time. We'll talk about, so TJ is going to be on the show yesterday. TJ sold all of his Palantir. Now, before everyone goes crazy, TJ was in an unfortunate situation. He had covered calls on 24,000 shares of Palantir at 35 and 45. I don't know if Palantir gets back to those levels, but he called me the other day and he realized, like, he's just not making money off Palantir anymore, right? You get TJ's whole philosophy is I wheel a stock, I get premium, and I use that to generate returns. He can't make any more money off of this thing if he can't keep writing covered calls on it. So he made 600 grand selling all of his Palantir, and then he bought, I don't know the exact number, but I think he bought like 2,500 leaps. I could be wrong on that number, for like $65 January 2027. So if Palantir does go up to like 80, 90, 100 in the next 2 years, his leaps will print. And he can write cover calls against those leaps, so he can actually generate some premiums. But if he had those shares kind of stuck, A, he would get those shares called away if Palantir keeps going up, and B, he just can't make money off them. So tomorrow on the Market Open, when he joins for our segment, we're going to discuss the strategy. I think it'll be very informative for a lot of people because, look, he got his hand stuck in the cookie jar with Palantir, right? He thought at 45 that would be a decent price, and obviously Palantir is running away rapidly from that $40 level. So if that's the case, then he had to make a decision. So he still made a decent profit. 600 grand after 2 years of holding Palantir is not bad. But this is where covered calls kind of went in the wrong direction, and now he's long leaps, but not shares anymore. So we'll talk about that tomorrow when he joins the show as well. Why didn't TJ roll the calls? TJ already rolled the calls from, I think he had covered calls at 30 and he rolled them to 45 when Palantir was at like 39, but he rolled them to 2026. So is Palantir going to be 45 by January 2026? I don't know, bro. Unless we get a nice 50% correction, maybe. But if we don't get that correction, which I don't know why it would happen unless the whole market corrects, it's going to be tough to get right back there in the next year. So that's what he has to do as well. Is that a poor man's covered call? Yes. By buying leaps and selling the covered calls against the leaps, that's a poor man covered calls. So he's going to have a big cash pile soon. Correct. So that is why he did this, because now he has a lot in cash. Buying the leaps was way cheaper than buying the shares. He gets to control the same amount of shares by having the leaps. And so now he has a lot of cash to work with. And obviously, he can do a ton of things with that cash, which honestly, he doesn't care. He's not emotional about Palantir. He just wants to have cash that he can work with in 2025. And so for his strategies, it's not the craziest thing for him to play it like this. Okay, so to recap, this has been an absolute crazy market close. We still have one more thing to talk about that I want to get into. So Buffett bought $500 million of Domino's. Bill Ackman bought 12 million shares of Nike. Tesla's down because the EV subsidy is going away. Palantir is joining the NASDAQ stock exchange, which likely is going to get them into the NASDAQ index potentially on December 20th. That's why Palantir is up right now. NVIDIA bought 7 million shares of Applied Digital, APLD, and HIMS is up 5% right now. No one knows why, but HIMS is up 5%. And then Oklo and ASTS currently, I don't think they're going crazy right now. Oklo is down to, Oklo's down 10%. Okay. Oklo's down 10%. ASTS is down 11%. Applied Materials is also down 5%. Applied Materials beat on the top and the bottom line, but they are down 5%. Now, last thing we got to talk about is inflation. So for those that are just joining, Jay Powell talked about inflation. And here's what Jay Powell said in regards to interest rates. This was the exact quote. Let me just pull this up right here. I want to get the exact quote right. And then I want to go through a thread that I thought was actually really informative on inflation. So Jay Powell said, the economy is not sending any signals that we need to be in any hurry to lower rates. That ended up getting the Fed futures in regards to probabilities on rate cuts to go from 70-30 to 60-40. And you had the market a little worried about if we're actually going to get those rate cuts. Now, having said that, I want to go through this thread that I found that I thought was really, really important in regards to inflation. So let's take a look at this. Let's look at a little bit of a bearish thread to entertain the bear case argument right now. Buffett buys $500 million of Domino's, but he can't buy SoFi. That is correct. He is more bullish on pizza than online banking. So here we go. Let's read through this. The Fed's worst nightmare has begun. We now have multiple rising inflation metrics with a sign of a weakening labor market. For the first time since September 2022, both CPI and PPI inflation are officially back on the rise. Did the era of stagflation just begin? For the first time since April 2023, core PPI and CPI inflation are back above 3%. Even as the Fed thought inflation was heading to their 2% target, it clearly is not. Inflation has clearly leveled off above the Fed's 2% target, yet they keep cutting interest rates. We got an interest rate cut just last week. This helps explain why we have seen a straight line and higher price action in the 10-year. Again, the 10-year goes up when people sell off bonds. The reason they're selling off bonds is because they're worried about inflation. So why would you buy a bond at 4.5% if you think inflation is going to chip away at most of those gains, but giving you a realized return of like 1.2%? You would wait to get a higher return on the 10-year before you end up buying it, which would get the bond yield to go down. Even as the Fed has cut rates by 75 basis points with an unexpected 50 basis point cut in September, rates are rising, particularly mortgage rates continue to rise. Many believe mortgage rates are heading to 8% next. Meanwhile, U.S. temporary help service jobs are down 145,000. This is considered a leading indicator for the unemployment rate. Temporary help service jobs have shrunk for the past 23 months, the longest stretch since 2008. However, private payrolls did go up 254,000. So you're kind of weighing private payrolls against U.S. temporary help services and trying to come to a conclusion on which one kind of matters more when it comes to unemployment. And then this kind of takes us back to May 4th, 2024, when Jay Powell said that he doesn't see the stag or the inflation. This account right here is saying, well, wait a second. What if that is the new inflation is transitory call that they made back in 2021?
In addition, I would say, most forecasters, including our forecasting, was that that last year's level of growth was very high, 3.4% in, I guess, the fourth quarter, and probably not going to be sustained and would come down. But that would be our forecast. That wouldn't be stagflation. That would still be to a very healthy level of growth. And of course, with inflation, we will return inflation to 2%. And that won't be. So I don't see the stag or the inflation, actually.
So again, when Jay Powell said that, a lot of people had a lot of confidence, and that was in May. Since May, inflation has come down aggressively. However, now we are getting into the point that says, wait a second, do we actually have a weakening labor market with higher inflation? And obviously that would affect growth if we have a catastrophic labor market, because if we have strong inflation with lower labor, we're not going to grow. And that's not going to be a good thing. This might also explain why our boy Buffett has $300 billion in cash. So since the Fed rate cuts have begun, the average rate on the 30-year mortgage has gone up nearly 100 basis points. We now have 7% mortgage rates rising across the board. Consumers are losing confidence as rates rise, despite the promise of lower interest rates and relief from the Fed. This is beginning to look a lot like stagflation in the 1970s. Just as the Fed thought they had inflation under control, inflation and unemployment rebounded. If we see another wave of inflation in 2025, we could be in a similar situation, but likely not as bad as the 1980s. So the question then becomes, and I'll pose the question to the chat as well, do you think there is a world where we have inflation that goes back to 3%, 3.5%, and that messes up the ability for the Fed to cut rates, that messes up mortgage rates coming down, that definitely messes up, auto insurance rates coming down. It still becomes expensive to get a lease on a car like a Tesla. And do you think that definitively hurts growth if the labor market weakens, but inflation continues, which means the Fed can't cut rates to stimulate growth? And if people are getting laid off, they don't have money to buy things, which means Q1 or Q2 2025 earnings, if this happens in that time frame, would be absolutely horrible. That is the bear case. That is the bear case. Putting all of that together, that is like anyone who watches the show can definitely say, or you can definitely not say that you haven't heard the bear case. This is not just euphoria bull case all the time. We are definitely looking at data from other perspectives. So who agrees with that? I mean, let's do this. Put a 1 in the chat if you actually agree that that is a real possibility. Put a 2 if you think that's a possibility, but it's not going to happen. So a 2 is not saying you don't think it's going to happen, or a 2 is not saying you don't think it's a possibility. A 2 is just saying, maybe not that likely. Put a 1 if you think like, no, that's actually more likely than we think. I'm still kind of 50-50. I lean a little bit more towards 2 because shelter's coming down and so is energy. So I'm leaning more towards, and private payrolls are doing well, which means labor market is not horrible yet. And I think the Fed, by the way, the Fed was asked today, Jay Powell was asked, hey, are you going to cut rates? And Jay Powell said, the labor market is still pretty bad. And because the labor market is still pretty bad, that was the final question he had on the press conference today. That could be an argument for why they cut rates one more time. Now, maybe that's not going to be the right decision, but the fact that he is thinking that they do want to cut rates because of the labor market, that could justify us continuing to have a little bit of growth. I'll go to that final question to let you guys see what he said right there. All right, we got 50-50. We got some ones. We got a little bit more ones than twos. I would say 60-40. But we do have some ones that are saying that this could get hit. Here's exactly what Jay Powell said. This was the last question he was asked for those that didn't see it when it came to why are they cutting rates.
Toward neutral. I think the right way to find that level is carefully and patiently.
We've higher than the 12-month rate. The economy is booming. The market is on fire. Core PPI came in above expectations today. Business formations are up. Why are we cutting rates? It seems like the economy is doing pretty well.
The economy is doing very well, and that's a great thing. We totally welcome that. But look at the labor market. So what we've seen is a lot of the great data that we've seen has been because of the expanding supply side. Unemployment has moved up from 3.4 to now 4.1. By a significant number of indicators, it's still cooling. Our mandate is not for growth, it's for maximum employment and price stability. But on the inflation data, so we do see inflation continuing on that bumpy path I mentioned. Today's reading was slightly more of an upward bump than we had expected. But I would say the broader trend, if you look back over the last 18 months, we think that's still intact. We're going to tear this report apart and look at all the details. We'll get another report in December before the December meeting. We'll get another labor report. We'll get the final numbers for October by the end of this month, and we'll look at all of that and we'll make our assessment. We do believe policy is restrictive, and again, I would point to the labor market, but it's not clear how restrictive it is. That's a very fair point, and we're well aware of that. And I think we're mindful of the risk that we go too far too fast, but also of the risk that we don't go far enough. It doesn't seem like that's where we are either. It seems like we're right where we need to be. I mean, I do feel like the U.S. economy is in a very good place, and I feel like our policy is in a really good place. We've got a lot of space to cut rates if the economy weakens. In the meantime, we can take the process of reducing rates. We can be careful about that, and that's what we're planning to do.
I know we're short on time.
So there you go. After I gave you that whole bear case scenario around inflation and job growth, all that stuff, Jay Powell still answers the question by saying, hey, labor market's weak. That's why we're cutting. And it does indeed kind of sound like a pause, not going to lie. It does sound like there's a chance he pauses because in his remarks, he said we are in no hurry. But to that question, remember, he was asked, why are you cutting rates? Not why are you going to cut rates? And there's a difference there. Why are you cutting rates? AKA, why did you just cut? Well, labor market. She did not say, why are you going to cut? Because he probably would have corrected her and said, well, I don't know if we're going to cut or not going to cut, but we did cut recently because of the labor market. If they still have that same concern in the next, call it what, month, then they might continue to cut, but they might not if they think inflation is more of a concern. So he's setting up to screw Trump. Trump and Jay Powell. Jamie Dimon said this today. Jamie Dimon said that Trump has inherited an economy with a bit more inflation than he thought that that would be present. So, I mean, look, if Trump and Jay Powell have to go to war again over inflation, then you might definitely have a world where it's not going to be that easy for them to necessarily work together. Savage, thank you for the $5 super chat. My TLT Leap print looks really bad right now. And my TLT Leaps print shot's really bad right now. Well, TLT is down, right, today because of this stuff? TLT? No, TLT is up. Is that because the 10-year went slightly down a little bit? Well, TLT, or investors are just betting that, I mean, Jay Powell eventually will lower rates. That's why TLT was up slightly today. The 10-year did go down slightly. I mean, it was higher than it's down 0.004, but it was up in the morning. So maybe that also is why TLT was up right now. But I think a lot of people are piling into TLT to try to take advantage of the eventual cutting cycle where rates go down. Dude, I just got 2 notifications. One is someone liked my tweet about Bill Ackman. The other one on LinkedIn was someone followed me, and I read them together, and I thought it said Bill Ackman followed you. I was about to be like, oh my God, Bill Ackman followed me. Yeah, Bill Ackman did not follow me. But this was the tweet I just put out on Bill Ackman, which is that he owns 16 million shares of Nike. I don't get this one, but Bill Ackman is much smarter than me. All right, let's call Steve. Someone said call Steve. Let's call him. Let's see if Steve is a fan of the news. Let's see. You know, I was talking to Steve right before I had to go live. I forgot Jay Powell was talking today. So I'd say, Steve, I got to go. I got to go live. Let's see. Let's see if Steve picks up. Steve's going to be laughing about this news, dude. Steve, what's up?
What's up?
I'm live on the market close. Did you hear the news about Palantir after hours?
That they're going to the NASDAQ?
That they are going to the QQQ, baby. Are you excited? Are you happy?
I don't really care.
Why?
Amit, are you there?
Yeah, I'm there. Can you hear me?
Yeah, explain why this is big.
Well, hold on. What do you mean is this big? The Q's, the fourth...
I didn't ask if it was big. I said explain why it's big.
Okay, so the 4th largest ETF in the world that got 20...
Has to buy it. Blah, blah, blah,
Hold on. Let me finish. The 4th largest ETF in the world that got $28 billion of inflows this year, $318 billion under management. You're telling me that's not a big deal that they have to buy Palantir?
I mean, they're already a listed company. They're just going from the NYSE to the NASDAQ. I mean, great. The Qs have to buy it. Great. I mean,
Steve.
It's
Don't,
good, but
Steve.
This isn't the S&P. Don't act like this isn't the S&P.
It doesn't have to be. It doesn't have to be the S&P, but it's still a big ETF that has to buy a chunk of shares.
Yes, great, good.
Look, I know your covered calls are getting
More buying, great, more buying. More buying.
I know for your covered calls, it's not the best, but if you forget your covered calls, isn't this bullish for Palantir?
In all seriousness, the QQQ has assets under management of $316 billion. Okay. All I'm saying is this is not nearly as big as the S&P announcement, considering BOO has 1.28 trillion in assets under management. The SPY has 630 billion, and BlackRock's, which is IDV, has 564 billion. That doesn't include total market funds.
Steve.
Headline, it's great. Headline, it's great. It is definitely bullish to some extent. It is just not nearly as bullish as becoming part of S&P.
You know, Steve, you can't have every girl in the world. And the fact that Palantir has 2 of them, the Qs and the S&P. I mean, the fact that
I'll give you that. That was a good one. I didn't think you were going to say that after the first comment. I'll give you that.
You can't get every single supermodel, but Palantir has 2 of them. I mean, it's pretty bullish, dude. I know it's not a BOO.
Derek Jeter did.
Well, that's true. Derek Jeter did do that. But in general, I mean, in all like being realistic, do you think this was the right time for them to decide going to the NASDAQ?
Yeah, because what else is going to keep the momentum up? We're going down. We're going down. Go to the NASDAQ. That'll change the narrative about valuation. Yeah, it's a perfect time, actually.
I mean, look, all I'm saying is the shorts are not having fun with Palantir.
Dude, why anybody would short Palantir is crazy.
You got to be fucking crazy, bro. I agree. It's like
I mean, maybe I called Chris and asked, how the hell are we going to short this thing? Because this is stupid. But I would never short it because that's even stupider.
Yes, I agree. I mean, I know people
want to
short it.
This is like trying to short Tesla in 2019. That's what this is like.
Agreed.
Palantir, for some reason, does not have to play by the rules. And that happens from time to time.
Yeah, but sometimes with a generational company, you break the rules. That's what happens. I agree.
Mean,
it's fun breaking the rules. It's fun. You know, life is not about playing by the rules, though, right? Like, life's about getting out there and making your own rules.
Palantir is certainly making its own rules.
Okay, so we're going to end the market close in like 5 minutes, but I want to get your reaction to a couple things. Again, we'll talk on Friday, but 13Fs and 13Gs are out. I'm going to say...
You realize tomorrow's Friday, right?
Oh, shit. Tomorrow is Friday. Okay, well, I want to give you these two headlines.
You know tomorrow is Friday. Look at this. Your whole life is just one big revolving day, isn't it?
Dude, I was telling the chat that like I had to hang up on you because I was missing J Powell speaking, so we had to go live immediately. So,
you know, the only reason you know it's the weekend is because the market isn't open. That's the only reason you know it's the weekend.
You know, I slept from 7 p.m. to 7 a.m. today.
Yeah, you're freaking crazy. You are 26 years old. The fact that you require that much sleep is crazy.
That is kind of wild, dude. I should have 3 hours of sleep and be good to go. But yesterday I slept.
Dude, at my age, I'm still going to bed at 12:30 or 1 a.m. and getting up at 7 and putting in long days. Like, the fact that you need all this sleep is crazy.
Okay, hold on. First of all, I'm 27. Second of all,
God forbid, 27. God forbid.
You know what it is,
Steve?
Steve?
Said he slept for 12 hours. You just said you slept for 12 hours and you weren't even drinking.
I don't do this every day. It was just yesterday for some reason. Like, you know, I slept. Like, the thing is, dude, I stayed up so much in high school because I was on the debate team and I was traveling. Like, I stayed up so much that I think I'm done with staying up late. You know, like. So, okay.
What does debate team and staying up late have to do with anything?
Well, because we would be at tournaments, we'd stay up late, I'd be practicing.
Okay, whatever.
Okay, two headlines, and we'll talk more about it tomorrow. Warren Buffett.
Two headlines.
Warren Buffett. He bought $500 million of a stock.
What stock?
Well, you have to guess.
Domino's?
You knew this already. Don't fuck with me right now.
I did, yes.
Dude, if you're gonna do that, you have to do it. You have to be like, all right, I'm gonna give you 4 choices, and then you got to play with it. Don't like just ruin it like that.
Yeah, the guy owns freaking Dairy Queen. Is that a shock to you?
I don't know what he sees in Domino's, but
the guy owns Dairy Queen, all of it, not a share. Every Dairy Queen. Are you shocked that he bought Domino's?
I'm not shocked, but $500 million into Domino's is interesting, to say the least, for that one.
I mean, I don't think so. People love pizza. Domino's is efficient. Domino's is everywhere. I mean, I don't know. He likes foreign companies.
Okay. Did you get the line from Bill Ackman yet or no?
This I won't mess with you. I am not sure what you're talking about because Ackman's been all over the place with stuff.
Okay, so Bill Ackman bought a stock.
This I do not. I actually do not know this.
Okay, it's not a new stock. It's one of his existing stocks. So I think
no,
you know.
He exited Google, right?
No, he still has some. All right, so here's the choices. All right, either he bought Hilton, Canadian Pacific, Google, or Nike. Which one do you think he added more to?
It's probably Nike because I hate that one the most out of all those choices.
He bought 12 million shares of Nike.
What the hell is wrong with people?
He's smarter.
Obviously, listen, Ackman's way smarter than me.
He's smarter than me too. So
and he's got way more money than me. I am not questioning his investment ability or business acumen or anything. Okay, all I'm saying is it's freaking Nike. Like I know a lot of people that think Nike's going to make such an amazing comeback and everything. I got news for everybody. This isn't the 80s and 90s. Look at all the pop-up brands out there, and I'm not talking about Lululemon. Like, there are so many pop-up brands out there that are gaining momentum. I don't think that Nike has a moat with sneakers, and I certainly don't think they have a moat with apparel. Not something that I would want to be in.
Nike gives you a 2% dividend.
I'm aware.
So he's going to be making about $21 million a quarter off Nike.
Okay, great.
Maybe that's why he did it?
No, because you could buy Cisco instead, have a better company.
Yeah, I don't know. I don't know about Nike.
2.7%. My Cisco article just dropped, actually. And the quarter was very promising.
Wait, is it on your Twitter? Can I link it?
I didn't tweet it yet. Just go Seeking Alpha and grab it.
Okay.
But we need to have a talk about Cisco. This is, I'm going to say something that may sound a little crazy. But I think 2025, Cisco goes to 70.
It's at 57 right now.
It sold off just a little bit because revenue declined year over year on a quarterly basis. But their guidance for 2025 is a increase year over year on revenue and Their margins are great. Profit margin, I believe, is 19.5%. Free cash flow margin of like 24, 25%. And I think they're generating around 11 billion free cash flow. They're trading at like 14 times 2026 earnings. And they keep buying back freaking shares like it's going out of style.
All right. We'll
And I don't think people really understand the infrastructure play from a business aspect. But Nike doesn't make sense. Like, okay, I used to wear Nikes. I wear Adidas now because I think they're more comfortable. Personal preference, everybody's got one. But back in the day, you had Converse wasn't real. Converse died out in the 80s. You had Reebok, Adidas, Nike. I don't even think Puma was big. And those were the big three. New Balance has always kind of just been there. I don't think they're a huge brand, but they're definitely somewhere in there. I mean, from a sneaker aspect, I don't know that Nike is that much more superior than any other brand. And then on clothing, think about all the brands you have. I mean, you didn't have Lululemon, Fabletics, or any of that stuff back in the day.
Okay, look, can we think outside of the box? Can we find any reason why he would do Nike?
It's a clothing company. What is there to think outside the box on?
What if China recovery is something we're not really understanding?
Okay, so China recovery.
China stimulus.
Which you know that I believe in.
Yeah.
So what road do you want to go down? That they increase their standard of living, more people come into the middle class, more people buy clothes and other stuff. I mean, you could say that about everything. And while it wouldn't be wrong, I don't know if that's enough for Nike.
No, I agree.
But I mean, seriously, unless they're going to improve their margins or have some way to grow significantly, where is the bull case? What are you going to do? You're going to keep signing athletes and spending money on endorsement deals? There's nothing. What is proprietary about Nike? You know what I mean? Like anybody can start a clothing company. Whether it succeeds or not, it's different. Not everybody can start a freaking top tier software company.
Oh, the new CEO. That's why.
Great, new CEO.
What if Ackman had a conversation to handpick that guy?
Well, maybe he did, but once again, for Nike to appreciate, they need growth and they need better profitability. The only way you get there is cutting costs, improving margins. I don't know how much they're going to be able to do that. I don't know. There's just so many others. Like, okay, would you rather own Nike or Amazon?
I mean, I pick Amazon.
Would you rather own Nike or NVIDIA?
NVIDIA. Probably.
Would you rather own Nike or Apple?
Well, look, if you think a recession's coming and there's going to be a crash in all these tech stocks, you wouldn't want any of those names. You'd want.
Would you rather own Nike or Coca-Cola?
I mean, there's a better dividend on Coca-Cola. So I mean,
the only downside to Coca-Cola is RFK is going to fucking go hardcore on fucking sugars. So, I mean, that's the whole food industry and drug industry needs to worry about stuff like that. But no, in all seriousness, you want to talk about a dividend play. Okay, would you rather own Nike or Pipeline Company? They're both boring as hell. At least with a Pipeline Company, you're getting a 6 to 8% yield.
I don't know. I guess we'll figure it out. All right. Well, we'll talk tomorrow and try to go deeper on this. But yeah, I have no idea. I'm going to try to do some research and see why you'd be interested in it. But Buffett buying Domino's, that makes a lot more sense. Makes a lot more sense to me.
Yeah, Buffett figured out every food he likes to eat by the age of 6. Of course he's going to buy Domino's.
Yeah. Okay, last quick question for you, Steve.
I tell my wife that all the time when she's trying to get me to eat sushi and like sushi for God knows how long. I'm like, I forget all the foods I like to eat at 6 years old. I'm good.
Yeah. Okay, last quick question for you. Then I got to get out of here.
Well, where do you have to go?
I have to go record another video. I gotta go. Like, I got stuff to do, bro. We've been live for 2.5 hours. Like,
your whole life is live.
I know. I'm in my 20s. This is a grind. This is
you're saying you should be working 20 hours a day, not sleeping 12.
Okay. So that was one day, bro. I don't sleep 12 hours. I sleep like usually 5 hours a day or 6 hours. Like, that was just yesterday.
I think that you and I should build a sports card trading.
All right, Steve. Like, here's the question. All right, then we got to go. We'll talk about this tomorrow. Tesla's down 7%. because the EV subsidy is gone. Bullish or bearish?
Bullish.
Why?
Because it fucks over every other EV company, and Tesla is still going to be fine. Like, oh, you're really not going to buy a Tesla because you're not going to get that $7,500 credit? Like, really?
I would not have bought my Tesla. Yes, 100%. I'm not like that. 7,500 was a big deal for me.
Okay, so then maybe I'm wrong. Maybe it's bearish in the short term, but it's bullish in the long term because I don't think that Tesla lives and dies with the EV company.
Well, that was my take.
It's way bigger than the car business will ever be, even when it gets FSD.
That was my take. My take is bearish short term, bullish long term. I agree.
Yeah. I don't think it matters. I mean, it's going to hurt everybody the same, more or less. And at least Tesla has FSD prospects, robotaxi prospects, even though I think they're ridiculous, and the inevitability of robotics. It's inevitability. It is not a maybe.
All right.
So
that's fair. That is fair.
I don't think you have to worry about anything with Tesla. Just once again, I wouldn't short Tesla here. Like, you gotta be crazy to short Tesla.
I wouldn't short it either. I think this is kind of, I mean, short sellers already down $6 billion. Now it's probably like $3 billion because Tesla came down.
The real question is, what industry goes boom next year? That's the real question. Is we have had 2 great years. Like 2023 was a really good year for the markets, and this year's a really good year for the markets. Are we going to get a third really good year? And if so, what's the plan?
I agree.
That's the question.
All right. We'll talk tomorrow. Thank you, Steve, for your reaction. We appreciate it. Steve's article on Cisco, for those that want to read it, right here in the chat. You guys can check it out. And
boring company everybody's sleeping on, but it's going to keep going up.
All right. There's his article in the chat. Thank you, Steve. Talk tomorrow.
All right,
Later. All right. Exciting market close. Again, you got Tesla down. HIMS went up. No one knows why. Tesla went down. EV subsidies. Ackman's buying Nike. Buffett's buying Domino's. Palantir. I did not expect that one, folks. I feel like I'm usually on top of things with Palantir. I did not expect the Qs to be on the way for Palantir. That's a big deal. Good thing for Palantir. Again, the shorts continue to get quite honestly screwed with news coming out every single day as Palantir continues momentum. Palantir right here up 3.84% in the pre-markets tomorrow, or in the after hours tomorrow. If this news continues to be perceived as bullish, I think, they can keep their strength that they're getting right now. Also, Renaissance Technologies, we were talking about them. They are now the largest shareholder of, or not the largest shareholder, but Palantir is their largest holding inside of the Medallion Fund. Let me just show this right here. Or I don't have the exact news source yet, but Palantir is now worth over $1 billion in their fund. The next largest is Novo Nordisk, United Therapeutics Group, Apple, Microsoft, Airbnb, and Nvidia. Let me see if I can pull up this website real quick. Also, I just got the notification that they bought another company. Their portfolio is like my portfolio, but their portfolio is way bigger, just a little bit more bigger. And they bought more Robinhood. Let me see if it's out on Whale Wisdom yet. It might not be out yet. It might be out in a little bit. Yeah, it's not out yet. Yeah, we only have as of September 30th. All right, so that'll take some time to come out. But Renaissance Technologies added more Robinhood, and Palantir is now their biggest holding inside of their portfolio. Okay, cool. There we go. Thank you, everybody. Tomorrow we will be back. Druckenmiller is not out yet. Let me do one more check if Druckenmiller is out. He is not officially out yet. No Druckenmiller yet. All right. Hopefully that'll be out soon. And yeah, that's pretty much it. Bill Ackman, Carl Icahn, David Einhorn, Bill and Melinda Gates, Value Act, Daniel Loeb, Warren Buffett, David Tepper, Michael Burry, Howard Marks. All of them were out tonight. I'll go through them again tomorrow in the morning. We'll do a recap of all the things that they bought and sold. But for those that are just catching it right now, you can rewind in the stream. And the chapter that says David Tepper, that's where all the madness starts with these 13 Fs coming out. And we'll go through them. Also, last thing, forgot to show this one because of how crazy this day was. But, and I don't have an answer for this one, money market funds are up 81 billion. This is a week after markets went to an all-time high after Trump got elected. 6.67 trillion on the sidelines. there is some money that is still deciding to get into those money market funds. This, by the way, was with the expectation that Jay Powell would cut rates last week, and he cut rates, and still money came into money market funds. So either that money's coiling up to eventually come into the stock market, or that money is just waiting it out a bit. But over the next few weeks and few months, we are going to get more information on that. All right, there we go. Fun day. These are the days we live for, right? These are the days where you have news coming from every single sector, and you got to get ready to analyze it. Thank everybody. Love you all. We'll be back tomorrow. Market open, 8:45 a.m. on the market open, and we will have TJ on tomorrow as well, and we will discuss his big Palantir trade that he made yesterday night, and discuss more about that and keep going further from there. All right. Thank you, everybody. I'll see you guys tomorrow on the market open. Also, I know I keep yapping, but daily Palantir episode is going to be coming out in probably an hour and a half. So about 7:30 Eastern Standard Time. We will go through the Rio Tinto deal. We will go through all this new NASDAQ stuff, and we will go through the Bank of America $55 price target for those that haven't seen that report. That was a very, very important report for longs on Palantir. So all of that information, 7:30, that episode will be out in about 90 minutes. All right. Thank you, everybody. I'll see you guys tomorrow on the market open. Bye, everyone.